Good morning, everyone. Good morning, all students. I am CA Ankit Sharma, and I'm your Direct Tax final faculty for the session. So, this gives me immense pleasure that I am meeting you all virtually, not able to see you, but you can see me. So, you all are my FCA's future chartered accountants, and I hope you all are going to be chartered accountant very soon. You will be part of our faculty very soon. So today, our topic is Direct Tax Chapter 1, Basic Concepts and Partial Integration. So what is our subject? First of all, let me discuss for a few minutes, for 2 minutes, about our subject and the topic we are going to cover today. So let's see what we have in today's session. So our paper, Direct Tax, of course, you all know, 100 marks papers, it has two parts, direct tax and international taxation. So you can see that we have direct tax part which comprise 70 marks and the international taxation is 30 marks. You all must have been already go through your studies, and one important thing, I have uploaded the notes yesterday. So I believe you all must be downloaded it because we are going to study on the basis of notes. So direct tax comprise 70% marks. And today we are going to discuss chapter 1, that is basic concepts and integration provision, that integration of agricultural income with non-agricultural income, that integration provision also. So what we have in today's class, what we are going to discuss, what topic I am going to cover, what are we going to learn in this class. Here are some highlights. First of all, we will discuss about the background of Income Tax Act. We will discuss about the background of Income Tax Act. Then we will move on some very important definitions of income tax, like person definition, like income definition, like assessee definition, like assessment definition, etc., etc. We will discuss. I am here for you. Do not worry, we will cover all the topics. Just enjoy the lecture. Just enjoy the studies. Just enjoy this journey of becoming a chartered accountant. Do not take burden, do not take load that, oh God, how difficult it is. Just enjoy it because this is what going to make your future. What are you going to be? It depends what you are, how you are studies. So I told you we will discuss about the background of income tax, definitions, and we have more things to discuss. There are rates of income tax, provision of rates of income tax. Of course, you all have passed your intermediate course, so you have a basic knowledge of all these things. But let me tell you, there are something new in every lecture. It just depends upon you, what you want to extract. Fine? Rates of tax plus surcharge provision. And you know, surcharge provisions are so complicated nowadays because its rates are like 10%, 15%, 25%, 37%. Depending upon the total income limit, and it's being more complicated when you have income from dividend or long-term capital gain and short-term capital gain under section 112A or 111A. Then it becomes more complicated, but relax. I have made a chart also for this, and we will discuss how to identify the correct rate of surcharge in different cases. Okay. So we will discuss rate of tax and surcharge rates, of course, and we will also going to solve question also. Do not worry. Then we have partial integration provision. Let me tell you, partial integration is not in chapter 1 of your study material. It's in chapter 3 of your study material, but we just take the part of that topic from chapter 3 into chapter 1. So we will discuss the partial integration provision under basic concept chapter. It's also a numerical topic, and it's also connected with somehow the rates of income tax. Fine. So partial integration we will also going to discuss. Then we will discuss case laws, which is given in your study. We will discuss test your knowledge questions, which is also given in your study material. And one new thing for you. This is new. This is for new. That is a MCQ test. I have prepared 10 MCQs for you, and we will conduct a test, a rapid test of that MCQs. And those who will give the answer of all MCQs correctly, I'll announce their name with a virtual trophy and a virtual chocolate. Of course, I can't afford a physical trophy and a physical chocolate. So I'll allot you a virtual trophy and a virtual chocolate. Those who are going to answer all the MCQs correctly. Fine. So as I uploaded in the notes, and I've told you that I have seen this thing. Like, I've been in teaching from 2004, like from last 17 years, I was teaching only income tax. So I used to find one thing about the students, that in numerical papers, like direct tax, like cost, like FM, life accounting, in these kinds of papers, students do not give much weightage to the theoretical concept. They do not give weightage to the theoretical concept because they are more focused to that numerical part. But that is a wrong practice. Don't do this. Trust me, don't do this. Theoretical provisions are basic foundation of every numerical topic. They are basics and we ignore them. When we come to the numerical topics, we just try to focus on the numerical topics. That is wrong. Please give weightage to the basic concept also. Just like that, do not underestimate the power of a common man. You heard that dialogue? So the same way, do not underestimate the power of theoretical concept, the basic concepts. They are really, really, really important. So please trust me. An institute is very, very, very smart. The examiners are very smart. The paper makers are very smart. They know that students are giving weightage to the topics which are more numerically. So they might be thinking, they might be reading your mind, and they might frame a question from these basic concepts. So every chapter, we are doing Chartered Accountant course, we have to learn each and everything. So basic concepts as well as numerical, theoretical, everything is important. So now we move to the provisions one by one. So I have uploaded the sheet. I hope you all have downloaded. This is the sheet we are going to discuss. Patience and hard work is the only key to success. And trust me, this is not the only just like a quote, but that is a reality. I do believe on this thing. If you have patience and if you do hard work, this is all a CA can do. It's all the students can do. And if you are doing this, you will get whatever you want. So Income Tax Act 1961, we are going to discuss Income Tax Act 1961 provision. Once again, we are going to discuss Income Tax Act 1961 provision. It does not mean that income tax collection comes into force from 1961. No, no, no. Income tax was collected from very long time. Like initial days, it was called Lagan. When a king charges from his people in the form of commodity or in the form of monetary form. So we called it Lagan in initial days. But now that reforms in a more structured way, in a more decent way. So now we call that Income Tax Act 1961. So we are reading Income Tax Act 1961, it does not mean that income tax collection has been started in India from 1961 or onward. It's same. Like you are reading Companies Act 2013. It does not mean that companies incorporation started in India in 2013. No, it was a prior act also, 1956. And the oldest Indian company was East India Company. So in the same way, we are discussing Income Tax Act 1961. So assessment year, of course, 2022 and 23 provisions we are discussing, which is applicable for May 22 and November 22 examination. I prefer, please read the following guidelines. This is for your benefit. If you'll follow these, you'll be getting better result. Notes are based on, of course, study material of ICAI. ICAI beautifully drafted study materials. Trust me, all other teachers' notes, private coachings are irrelevant. Just focus on ICAI study material. Everything in examination will be out of it. So please do not ignore it. Read each and everything ICAI provided to you. And I am saying this to you. I've been teaching from 17 years, but let me tell you, the study material is so beautifully drafted that you should focus on that. Again, after 30-40 minutes of lecture, we will take the query. So whatever your query, you can send it to me. It's not an issue, but we will take exactly after 30 or 40 minutes, all of your queries, what will be there. So some students saying good evening. Let me say you good evening. Surjit, okay. Janki, good evening. Hemant, good evening. Pavan, good evening. Very good evening to all of you. Again, please ask queries related to our topic. So whatever is our topic, try to focus on that. And whatever is query, just try to find out the query which is directly or indirectly related to our topic. That will be really benefit for you and also for me, because I have to cover at least 72 pages. You know, chapter 1 is comprising almost 72 pages. That's of course, the number of pages I have made for you also. So we have to cover in next 3 hours, 72 pages, including questions, your queries, your test for knowledge question, case laws, and of course the topics. So if we are focused to our topic and the queries will be on our topic, so it will be really easy for me to cover each and everything. And of course, please focus during class, the most important word of life. Focus is the most important word of your life. Focus. Whatever you are doing is focus. If you are playing, focus on whatever you play. If you are studying, please focus what are you studying. So if you are studying and you are thinking about playing, so you are not getting anything. And if you are playing and thinking about your studies, again, you're not getting anything. So now for 3 hours, because we are studying, you are actually investing your time for this lecture, then please focus on this lecture. Move on to our topic one by one. Constitution of India, of course, it is the originator of every act in India. So Constitution of India is the originator of Income Tax Act 1961. We all know this. Why are taxes levied? It's a good thing when I am teaching to the final students, I feel, because they are not blank about the Income Tax Act. When I taught them in IPC intermediate level, so I have to discuss each and every word. But now, because you are in final, you have a basic background, you are intelligent students, because you have cleared, you are almost a chartered accountant after clearing your both group. One by one or together, you will be a chartered accountant, and I believe you all will be a chartered accountant. So if you are in final, you are going to be later or sooner a CA. I pray sooner. So why are taxes levied? Of course, you must have all know about this. The reason for levy of tax, is that they constitute the basic source of revenue. Of course, government needs revenue for infrastructure, for defense, etc., etc. So imagine government is a big colony. It works like a colony. So to maintain that colony, we need funds. So how we get the funds? We raise it from the person who lives in that colony. The same way, government needs fund. So revenue raised is utilized for meeting the expenses of government like defense, provision of education, healthcare, infrastructure, facility like roads, dams, etc. That's why government collect taxes. If you have any query, you can send it to me now or later, whenever you want. We will discuss after 40 or 45 minutes. I am here. Trust me, I am here. I'll discuss and elaborate each and everything for you. Just believe me. Now, overview of income tax in India. Let's get into the technical aspects. The Constitution of India in Article 265 lays down that no tax shall be levied or collected except by the authority of law. Accordingly, both the levy of tax as well as its collection shall be made under a law framed by government. Constitution of India gives the power to levy and collect tax, whether direct or indirect, to the central and state government. Either tax will be collected by central government or state government. The parliament and the state legislature are empowered to make laws on the matter enumerated in the 7th schedule by virtue of Article 246 of the Constitution of India. So Article 246 contains 3 lists. One is union list, other is state list, and third one is concurrent list. The union list contains only those matters on which central government or union has power. In state list, those matter which is covered by or which is empowered, which is delegated to the states. And concurrents are those cases which has been empowered by or ruled by both central or union or states. So this must have been already studied by you in, of course, intermediate or somewhere else. But do you know what are these kinds of power? What kind of examples of this? I mentioned some example for you under union list, under state list, and under concurrent list. I believe most of you might be knowing about these powers, but for those who do not know about the list, who just read it out like union list, state list, and concurrent, should know about something more, and this is something more. The following are the list. Union list or list 1. Parliament has the exclusive power to make laws on the matters contained in union list. For example, defense, arms, atomic, CBI, taxes on income other than agricultural income. You must have read it. At least taxes on income other than agricultural income. So entry 82, point number 82, entry number 82 of union list gives the power to impose income tax on all income other than agricultural income to Parliament. So who can impose tax on agricultural income if Parliament cannot? That the power has been delegated to state government. So that is under state list, or we can say list number 2. The legislature of any state has the exclusive power to make laws on the matters contained in the state list. For example, police, public health, sanitization, libraries, and the important is taxes on agricultural income. Taxes on agricultural income. We have the power for this, that taxes on agricultural income. So states have the power to do this. They can do taxes on agricultural income. Point number 46 and point number 82 says taxes on income other than agricultural income, that power has been delegated to union list. What the concurrent list do? Let's see. Concurrent list have some other power. Both Parliament and state legislature have the power to make laws on the matters contained in the concurrent list. For example, criminal procedure, criminal law, marriage, divorce, prevention of cruelty to animals, etc. So I have just written some examples, so you might have an idea what kind of power government have in list 1, what kind of power state have in list number 2, and what kind of concurrent list includes. Okay, so moving on further. Income tax is the most significant direct tax, entry number 82. You understand it? Entry number 82 of the union list. In list 1, in the 7th schedule to Article 246 of the Constitution of India has given the power to the Parliament to make laws on taxes on income other than agricultural income. So now income tax is levied on the totaling of the previous year of every person, a person, HUF, AOP, BO, etc. The income tax law in India consists of the following components. So there are certain topics which are very easy, which we not need to discuss in detail. So I'll read it a little faster. So we will have time to discuss the important topic in detail. So component have Income Tax Act 1961, Annual Finance Act, Income Tax Rules, Circular, Notification, and Legal Decisions of Court. One by one, the Income Tax Act, we all know it is extended to the whole of India. It applicable from 1st April 1962. It contains section 1 to 298 and schedule 1 to 14. It undergoes a change every year by the Annual Finance Act passed by Parliament and other legislations like the Taxation Laws Act. The Finance Act, what we call it budget, every year the Finance Minister of the Government of India introduced the Finance Bill in the Parliament budget session. When the Finance Bill is passed by the both houses of the Parliament and gets the assent of the President, it becomes the Finance Act. We all know that. Fine. So first schedule of the Finance Act contain 4 parts which specify the rate of tax. Part 1 of the first schedule to the Finance Act is specify the rate of tax applicable for the current assessment year. So part 1 contains the rate of tax for the current assessment year. Part 2 specify the rates at which tax is deductible at source for the current financial year. So it describes the tax is deductible rate at source, that is TDS rates, for the current financial year. Part 3 gives the rates for calculating income tax for deducting tax from income chargeable under the head salary and computation of advance tax. And part 4 contains computing net agricultural income, rules for computing net agricultural income. So we discussed Income Tax Act, Annual Finance Act, and now comes to the Income Tax Rules 1960. They are pure theoretical things. It's very simple. There's nothing complicated, nothing like which we can discuss in detail. These are things we need to understand. These are structure, these are components we should understand. The administration of direct tax is looked by the CBDT. Of course, we all know the Central Board of Direct Tax is the authority which frame rules. The CBDT is empowered to make rules for carrying out the purpose of the Act. For the proper administration of the Income Tax Act 1961, CBDT frame rules from time to time. These rules are collectively called Income Tax Rules 1962. It is important to keep in mind that along with the Income Tax Act 1961, these rules should also be studied. Of course, we are studying it. Circular notification, these are technically issued by the government time to time for, we can say, some kind of clarification. Law cannot be completed when it has been made. We cannot make all the provision when we make a law. So there are things, there are situations which arise after we make the law. So to cover these situations, to provide some explanation, to just remove some confusion, we need to issue some circulars and notification. And these are over here. Circulars are issued by the, of course, CBDT from time to time to deal with certain specific problems and to clarify doubts regarding the scope and meaning of certain provision of the Act. Circulars are issued for the guidance of the officer and assessor. However, it cannot override the provision of the Act. Circulars cannot override the provision of the Act. The department is bound by the circular, while such circulars are not binding on the assessee. This is an important point. Circulars is bound upon the department. The department is bound by the circular, but assessee is not bound by the circular, but assessee can take advantage of beneficial circular. But notification is binding upon both. The difference between a circular and notification, basic difference is that is circular is only bound upon the department, but notification is bound upon both. Notifications issued. Okay, fine. There's an example. First, we read the example. Under Section 10, 15, 14, as interest payable by a public sector company in respect of such bonds or debenture, and subject to such condition as the central government may by notification in the official gazette specify in this behalf, would be exempt. Therefore, the bonds and debenture interest on which would qualify for exemption under this section are specified by the central government through notification. So notification are also issued by the central government to give effect to the provision of that. So circulars are issued by CBDT and notifications are issued by central government to give effect the provision of the Act. The CBDT is also empowered to make and amend rules for the purpose of Act by issuing notification which are binding on both department and assessor. Remember it. Notification is binding on both department and assessor. So queries are coming. We will discuss it. Do not worry. After some time, after completing our 40-50 minutes, I'll take the queries. Then I'll start again. Break will be between 7:30 to 7:45. I'll let you know when the break time will come. Now, case laws is also a very important component of the Act. The study of case laws is an important, unavoidable part of the study of income tax law. It is not possible for Parliament to conceive and provide for all possible issues that may arise in the implementation of the Act. Hence, the judiciary will hear the dispute between the assessee and the department and give decision on various issues. The Supreme Court is the apex court of the country, and the law laid down by the Supreme Court is the law of the land. The decision given by the various high courts will apply in the respective states in which such high courts have jurisdiction. Correct? Supreme Court is the apex court. Whatever it will say, that will be the law for us. High court, what will be say, that's going to be applicable in that specific states. Now, moving on to rules of interpretation. I guess this topic is also covered in your law of, I guess, intermediate course and might be also in foundation. I hope so. But we are also going to discuss it over here. Do not worry. I'll refresh your knowledge. I'll try to give some important knowledge on this topic also. Rules of interpretation are principles that have evolved over the years on account of interpretation of provision of law by various courts. These rules helps in interpretation of the law. The object behind use of these rules is to ascertain the intention of the lawmakers. These rules are not static and keep on evolving. They're not fixed. They generally keep evolving by time and as per the situation. At times, there may be more than one rules of interpretation. Let's go to the rules directly. Significant rules of interpretation used by the courts. Rules of literal interpretation. What this rule says? It says whatever has been written in law or in act, the judge, the court should try to take a literal interpretation where it is possible. If it is required, then literal interpretation should be taken. This rule is based on the age-old doctrine that judges do not legislate. They only interpret law. Of course, judges are not God. If there is a case in front of the court, then judge, how they find a solution, how they give an order, they do what? They just read the law. And interpretation made by them it's to be known as the judgment. So whatever they interpreted as per the law, what has already been made, the law has already been made. So what they technically do, they read that law and find the real interpretation of that act or that section or that paragraph. And on that basis, they provide their judgment. So the rule is based on the age-old doctrine that judges do not legislate. They only interpret law. It stipulates that the intention of the legislation must be found in the words used by the legislature itself. Attention must be given to what has been said and also what has not been said. If this is important, what has been said, then equally this is also important, what has not been said. Nothing should be added or subtracted. The provision is unambiguous. And if from that provision, the legislative intent is clear, the other rules of construction of statutes need not to be called into. If the interpretation is clear, then there is no requirement to go to other rules or to go for any further interpretation. So if law is clear, then judge will follow that interpretation only. The mischief rule, very important rule. Mischief rule has been made to prevent any mischief. If some person try to misguide something, to do something which law do not want, but still there is some lacuna in the law, and that person is taking the advantage. So to stop that thing, if a rule has been made, we called it mischief rule. The mischief rule originated in 16th century in the Haydon's case in the United Kingdom. It is commonly known as the Haydon's rules or purposive construction. Under this rule, the position before an amendment or enactment of an act is examined to find out the mischief sought to be remedied to determine the rationale for the remedy. In order to do so, the following aspects are looked at. What was the law before the provision was introduced or amended? What was the mischief or the defect for which the earlier provision of law did not provide a remedy? For example, government, just assume government made a provision that smoking is prohibited on road. Imagine government made a provision that smoking is prohibited on road. In that case, some person can go to the park and smoke, can go to the cinema hall and smoke, because they can say that this is not road, this is a park, that's a cinema hall. So they are doing mischief. So to control this mischief, what the provision is being made by government that smoking is prohibited at public place. Now everything is covered. Road, park, cinema hall, school, colleges, they all are public place. So now you cannot go there and smoke. But if the provision was like that smoking is prohibited only on road, then people can take the advantage. So in that case, government can draft it like this to control the whole thing. So what was the mischief or the defect for which the earlier provision of law did not provide a remedy? We need to see it. What remedy has the parliament effected in the provision of law to cure the mischief? What is the intended effect of such remedy? Courts then have to make a construction that suppress the mischief and advance the remedy. The golden rule says it allows a judge to depart from a word's normal meaning in order to avoid an absurd result. If some provisions is not providing the correct judgment, then the judge has the power to depart from the normal meaning in order to avoid an absurd result. It is a compromise between the literal rule and the mischief rule, correct? It is just, you can say it's an opposite of the literal rule. Literal rules say you have to follow what has been written. But if you are following, if the judge thinks that whatever has been written, if I am following that and that will result in an absurd judgment, then it can change that. And that is called golden rule. Like the literal rule, it gives the words of a statute their plain, ordinary meaning. However, in this leads to an irrational result, which is unlikely to be the legislature's intention. The court can depart from this meaning. In such a case, court would also look at the context in which a provision appears. The same words may mean one thing in one context and other in a different context. While ascertaining the true intention of the legislature, the main thing is, what is the true intention of legislature? We have to see it. The court must not only look at the words used by the legislature, but have regard to the context and the setting in which they occur. The meaning of words in an enactment is not to be ascertained by reading them in isolation. Fine. Rules of harmonious construction. Of course, it's work like in harmonium. If you have a harmonium, you have to control this part, you have to control the fingers, you have to correlate each and everything. Then only you can play in harmonium. The same way, harmonious construction says you have to take each and everything to find a rule, to find a judgment. The entire statute must be read as a whole, of course. The entire statute must be read like in harmonium. Further, all parts of section should be read harmoniously. Construction should be such that it provides meaning to all part of a statute. A construction which creates inconsistency. Just a second. Okay. So, if a construction which creates inconsistency or repugnancy between the various sections of part statute should be avoided. So we will find a construction, we have to construct something which is harmonious with the whole act. Principle of beneficial construction, if the court finds that two views are possible, then we will opt for the view which is best for the assessee, of course. Construction which is most beneficial to the taxpayer should be adopted. This principle is also widely used in the case of interpretation of fiscal law. That means financial law. Fiscal means financial laws. Apart from these rules, there are several other rules like judicium generis, nocturus successes, and stare decisis, which are often used by the court. I can give you a little knowledge on this also. Rules of judicium generis is the means of same kind. Like when you use the word etc., like the dog, cat, etc. That means you have to take the meaning from the previous words. So if we are writing dog, cat, cow, etc., that etc. cannot include wild animals because we are talking about the pet animals. Is used when particular words pertaining to a class, category, or genus are followed by general words. In that case, general words are construed as limited to things of the same kind. So we called it rule of same kind. The principle of nectaris seus is not clear in law, then known by an associate. If the law is not clear, then take the help of the associates, and that might be result to the correct decision. Implies that meaning of a word may be ascertained by the reference to word associated with it. Words derive color from the surrounding words. So you should understand the whole context, then we should find out the real meaning. And the last is the principle of stare decisis, that say to stand by things decided. If you have confusion on each or in any case, then you can see the history. What has been done in past, you can take the advantage of that decisions and then you can implement those decisions into your case. Stipulate that a view which is operating for long and is accepted and acted upon should not be easily departed from. Interpretation of different provision of the Income Tax Act 1961. In context 2 of the Income Tax Act 1961, the ensuing table summarize how different types of provisions are typically construed by the courts. Charging provision of courts is the basic provision, like income tax charging section is 4. So tax is levied by a charging section. It imposes a charge or liability to pay tax. If a person has been brought to tax within the ambit of the charging section by clear words, he has to be taxed, subject to specific exemption reduction, if any, available under the provision of the Act. Charging section should be strictly construed. Machinery provisions like a procedure. Machinery provisions provide machinery for assessment and collection of charge created by the charging section. So what has been said by what has been applicable by the charging provision, that is how to be done. The process how to be done will be explained by the machinery provision. Machinery and charging provision constitute an integrated code. The machinery provision should be construed in a way that makes the machinery workable. Penal provision, of course, if you default, if you violate anything, then penal provisions are there. Penal provisions are required to be construed in a strict manner. In case of ambiguity, the taxpayer should be entitled to the benefit of doubt. Deeming provision, which are like inclusive provision, which has been written, that has to be followed. But the related things also need to be followed. Deeming provision is intended to enlarge the scope of chargeability of income under a particular head or scope of coverage of a certain provision. This is a simple topic, you can read it out. Appeal and refund provision, we know that if you want to appeal, then the appeal provisions are there. But remember one thing, appeal is not something suo motu, held by you. If there is statutory provision that gives you power to appeal, only in that case you can appeal. The taxpayer has a right to appeal only if there is a statutory provision regarding it. If there is no provision of appeal in any case, then you cannot appeal that case. Provision giving exemption and reliefs, provision giving deduction, exemption, relief should be interpreted liberally and in favor of taxpayer, of course. Now, supports of to interpretation, that's we call aids to interpretation. That means the support. There is some support of also. There is also simple things like circular, notification, case laws. Almost they are also comprising these cases also. An aid is a device that helps or assists courts in interpretation of statutes. They can be broadly classified as. Fine. So what are the aids to interpretation? Like internal and external. We have two kinds of aids, of course, internal aids and external aids. So internal aids to construction, internal aids of construction refer to aids present within the statute itself. I know it's quite boring. Chapter 1 is like theoretical. You might be thinking it's boring, what is going on, but let me tell you. These are not boring. This is what exactly income tax is all about. So if we know the basic, if someone comes to you and asks what is the union list, and you told the things which have power with parliament, that is called union list. And if he might give me some example, you should know the example. That is what important. We are doing CA course, and that's why we are called professional. Do you know the meaning of word professional? The professional word meaning is expert. Do you know the meaning of expert? Expert know two things: the provision and the reason, both. Those are not professional. Those doing BCom, they might be known only the provision, but we are chartered accountants. We are called expert because we should know the provision and reason. As for example, you must have studied in your intermediate that there is like one person that's called Hindu undivided family. And there is Dayabhaga Hindu family and Mitakshara Hindu family. And Dayabhaga is applicable in Assam and West Bengal. In all other cases, Mitakshara is applicable. How many of you knows why Dayabhaga is applicable in Assam and West Bengal? Do you know why? I know. That is what I call the way you studies. You should know the things. You should not only read the thing. You should know the law. So do you know why? Can anyone answer me why Dayabhaga is applicable in Assam and West Bengal only? I am waiting for your reply. If you are asking me queries, so kindly, anyone of you, if you know about this, why Dayabhaga is applicable in Assam and West Bengal, why not in other states? So that is very important, the way we study, of course, because that's matter. We are doing a professional course and nothing is boring until otherwise you have interest in your studies. There's a very special story. I used to tell my all students this. At once, Albert Einstein, you know, the Albert Einstein, the great scientist. He was that great that technically we can say his brain has the highest IQs ever recorded. So he was that intelligent. He was super intelligent, of course. And you know, this is the real story what I'm telling you. That once he said to his accountant, I guess, or to his wife, the most difficult subject in this world is income tax. You know, he said this is reality, I'm not joking. Albert Einstein said the most difficult subject in this world is income tax. You know, the person who invent a lot of things, this much intelligent, he said he was not able to understand the income tax, but we are able to understand. That means I am better than Albert Einstein, and you are also, of course, because you actually cleared the intermediate course also. So whatever you can understand, he was not able to understand. That means we and you both are more intelligent than Albert Einstein. Is it so? No. Do not even think about it. That's not possible. Then why it happens that he was not able to understand the income tax when he can understand the super complex thing in this world? The problem is what? He has no interest in income tax. This is the problem. We are actually we can learn anything if we have interest in that. So Einstein does not have any interest in income tax provision. That's why he's not able to understand. He wasn't like that invention thing. So he find that more easy. So when you have interest in something, that is going to be easy for you. I can guarantee you this thing, personally or professionally, whatever you can think. Like some of you might be a very good dancer. But ask Sunny Deol. Ask him what is the most difficult thing. Ask Dharmendra what is the most difficult thing in that industry. You will say dance is the most difficult thing. Ask the Tiger Shroff. He will say dance is the most easiest thing. Why? Because he has interest in dance, and that Dharmendra does not have any interest in dance. So he find it very difficult. Like if I am going to ask you, if you are very tired after studying and your parents ask you, let's go to the party, let's go and dance. So you will feel so energetic. Even you are so much tired, but you will be interested if you are interested in dance and party. So you will feel so good. But if your parents are, let's go to some satsang or bhajan, you will say, no, no, I am very tired, I can't go, because you do not have interest. Why I am telling you this thing? To clear CA course or any course, I personally feel you have to fall in love with studies, not other thing. You have to create interest in your studies. If you feel your books like a burden to you, you are really going to be in a big trouble. So you have to feel that these are not books. These are my future. These are not notes. These are my note. So these are the things which can make me something what you want to be. So you have to create interest in your studies. And let me tell you one thing, if you create interest in a study, you'll feel the subjects are easy. And from whenever you are in 12th, 10th, etc., you might have been feeling this. Okay, those subjects you have interest, you find them very easy. And those subjects you do not have any interest, you find it very difficult. And it's going from class nursery till now. So create your interest in the subject. Now the problem is this, how we can create interest in our subjects. I'll tell you later in the class. Fine. So if you are getting bored, do not get bored, because this is really, really important. We are completing this thing and then we are going to the MCQ test also. And let me tell you, MCQ test 5 questions are based on these boring provision. So if you want to get the virtual trophy and chocolate, please focus. So internal aids to constructions are like explanation has been provided. Of course, explanation is generally meant to explain or clarify the meaning of certain words and expressions contained in the main provision. Proviso, generally the function of a proviso to crave out an exception condition to qualify a provision. Like for example, section 80 GGB and GGC discuss about the deductions which has been provided to a company or other than a company if they have any contribution to a political party. But there is an explanation which says the political party must be a registered party. The section says political party can get, if you donate to a political party, you can have a deduction. But the political party means a political party registered under section 29A of the Representation of the People Act 1951. So if you want deduction section 80 GGC or GGB, you have to donate that political party, and that has been prescribed in the explanation. So explanations technically lighten the provisions or explain the condition or exceptions. Non-abstention clause, it's called, that means non-abstain, the clause which has an overriding effect of other clauses. That the clause with construct with notwithstanding anything contained. So non-abstain means non-abstain clause, a clause that begins with the phrase notwithstanding anything contained in any other provision of the act, or notwithstanding anything contained in a particular provision of the act. Use of this phrase show that the intent of lawmaker is to give an overriding effect in case of conflict. Fine. Example, section 43B, you must have been, of course, read in the intermediate part that only on the payment base. Section 43B says that the following sums which has been prescribed in section 43B can be allowed as a deduction only if it has been paid. Marginal notes and headings. Headings may be prefixed to a section or a group of sections. Marginal notes are the notes which are inserted at the side of the sections in a statute and express the effect of section stated. Headings and marginal notes cannot control. Underline this, or whatever you can do. Headings and margin cannot control the plain words of the provision. Only in the case of ambiguity, they may refer to throw light on the intention of legislature. Definition clause in undefined word. The object of definition clause is to avoid the necessity of frequent repetition in describing the subject matter in the statute. When the statute defines a particular word, the same should be used unless the context otherwise required. You can read it, just a reading provision, nothing important in this. External aids to construction is legal legislative history. Of course, what is the history? In the history, whatever has been done, you can take the interpretation from that also. Circulars we have already discussed. Speech, that is an important thing. The speech made by the mover of the bill can be used to ascertain the mischief sought to be limited. The object and purpose of legislation. So the speech made by the mover can be taken for the purpose of legislation, but however, speeches made by the members of parliament at the time of consideration of a bill are not admissible as in aid. This is very, very, very important. Explanatory memorandum, dictionary meaning, you can read it out. These are simple things. We'll move on. Now, the more important topic of like important definitions. So, before taking this topic, let me see the queries and we will discuss it right now. Okay, so we have a lot of queries of every one of you. After good evening, let's see what are the queries. Okay. Pavan asking if the state list includes agriculture income, then why is income tax giving exemption section 10 for agriculture income? Because no tax has been imposed by any state. No state has been imposed tax on agricultural income. So income tax, of course, give the exemption because there is no state which is technically taxable the agricultural income. Okay, sir, is there any entry of Finance Act 10(3) list of Constitution? I don't know what is the question, Namita. Well, please elaborate your question, what you exactly want to ask. And if any one of you want to know the entries in the list, you can Google it. You can write it down the Google that the union list entries, they will give the full example of union list entries, state list entries, and the concurrent list entries. Okay, Yash is asking lectures applicable for May 2022 examination. Yes, Yash, already it is written in the first page of my notes. That is for assessment year 22 and 23. That is for May 22 and November examination applicability. Next, Namita Goyal asked, what is the difference between rule of adjacent generis? Difference between, you should ask me the difference between two things. No? This rules you are asking about the Namita, the rule of adjacent say. This rule says whatever has been explained, you should have taken from the previous letter. Like I've given the example, but if I am writing like pets, like a dog, cat, and a cow, then that means that the other etc. means it will take the meaning from the previous words. So you are asking me the difference between rule of adjacent generis and there should be an other also. Machinery provision is not clear. Namita is asking, Namita, machinery provisions, technically the procedure. Like the chargeability says that income tax is charged under section 4 and it says assessment year income will be, previous income will be taxed in assessment year. Income tax is charged on every person. So how it will be applicable, that is the machinery provision does. So all the provision like calculation of tax, etc., they are technically the part of machinery provisions. Sairam Malaysian Gali is asking, sir, what is the difference between the old law and new income tax law? What are you asking? I am teaching you Income Tax Act 1961, which is applicable for assessment year 22-23. So why you want me to ask what is the difference between 20 which law you are asking the difference? Old and new what? It has been changing every year. Pavan asked me the example for machinery provision. Yes, the calculation of income, house property, all the heads of income, how we calculate it. These are the provision, these are called the machinery provision. The calculation thing, the rate of tax, they all are the machinery provision, of course. Woman is the Karta. Naveen Prakash is asking, woman is the Karta. We will discuss in HUF provision, but let me tell you for time being, yes, after a Delhi High Court decision, I guess in 2016, a woman can also be a Karta in the Hindu family, but that is a Delhi High Court decision. Income tax has not been incorporated yet, but you can take the advantage of that decision also. Because Hemant Kumar, okay. Naveen Prakash, unlike other state, woman is the head. Okay, you are okay. You are giving the answer of my question. Okay, Naveen Prakash, woman is the Karta because the past tradition. No, For the past tradition, Hemant Kumar Mahapatra might be right. I don't know what you are mean to it, but I'll discuss it in my HUF provision. Okay, Naveen Prakash, like other state women, is the head. No, Janki, but because inheritance rights are different in Assam and West Bengal, inheritance rights are different in Assam and West Bengal is not the correct answer. I will discuss it. Do not worry. I am here. I'll discuss each and everything. Fine. So we have taken the okay. Fine. Mr. Harshad is also asking me something. Sir, did you told why we have two schools of law for HUF? The law has been made like this. I'll discuss all these things regarding HUF when we will discuss the Hindu undivided family provision. We are just going to cover it in a while. So moving on to our notes again, important definitions. Fine. There are certain definitions we have to discuss, and you might have been discussed each and every definition. So we will take this topic sort of fast. Okay. In order to understand the provision of the Act, we must have through knowledge of the meaning, of course, terms definition in the Act. Terms do not define in the Act. First definition is assessee. Assessee means a person by whom or any tax or any money is payable under this Act. In addition, it includes every person in respect of whom any proceeding under this Act has been taken for the assessment of his income. So any person who is liable to pay tax, that is an assessee. Every person against him any proceeding under this Act has been taken is an assessee. For his income, for the income of any other person in respect of he is assessable. The loss sustained by him or by such other person, the amount of refund due to him or such other person. Every person who is deemed to be an assessee under any provision of that, if you are deemed to be an assessee, you will also be called an assessee. And every person who is deemed to be an assessee in default under any provision of this Act. So technically there are 4 cases, then you will be called an assessee. First one, if you are need to pay, if you are payable to pay tax, that you will be an assessee. If you have any proceeding against your income, etc., or some other person, if you are a deemed assessee, or if you are an assessee in default. Assessment, this is the procedure by which assessment word mean assess, to assess something, to verify something, to calculate something, to check something. That is called assessment. So there are certain types of assessment we have, that is self-assessment under section 140A. You have to calculate your income, you have to calculate your tax, and you have to pay your tax. So whenever you pay all taxes, that is the tax called tax paid under self-assessment under section 148. That is suo motu, is to be done by you or your chartered accountant, etc. Summary assessment under section 143(1), that is the intimation provision. Whatever you have declared in section 140A under self-assessment, department will summarize it, department will check it and issue an intimation or deemed intimation under section 143(1). The main assessments are 3, 4, and 5. That is technically the main assessment. That one is scrutiny assessment under section 143(3). Scrutiny assessment, or we can say it regular assessment. Second is best judgment assessment under section 144 and reassessment or income escaping assessment under section 147. The most powerful assessment is 5th one, that is reassessment or income escaping assessment. These all assessment topic will be discussed in later in the final provisions chapter. Assessment in case of search, that is a separate specific provision which is applicable in case of search only. Fine. So please do not ask me what are the assessment, what is section 143(3), what is section 144, because these topics are not the part of basic concept. These will be discussed in later in other chapters. Now the definition is there, like person definition, one of the most important definition, that is section 231. Person includes individual, HUF, association of person, body of individual, partnership firm, limited liability partnership, company, local authority, and artificial judicial person. So there are definitions one by one. We can read it out a little fast. Individual means any single human being. In other words, when there is only one owner of income, when there is only one owner of income, he or she will be called, of course, individual. It includes both males and females. It also includes a minor or a person of unsound mind, but the assessment in such case may be made on the guardian or the manager of the minor or lunatic who is entitled to receive his income. In the case of deceased person, assessment would be made on the legal representative. Now we're moving forward to the HUF. Now what is HUF story? This is an important thing. HUF. So the definition of HUF is not given under Income Tax Act. Income tax does not describe the definition of HUF. It has been taken from the definition of joint Hindu family, which is also has not been prescribed under Income Tax Act. This definition has been derived from Hindu law. Hindu law, which is based on our Vedas. Four Vedas: Rig Ved, Yajurved, Samved, Atharved. So we have four Vedas, which is actually Hindu law has been based on these Vedas. And from this Hindu law, the definition of joint Hindu family has been derived. And what it says? It says all male and female who reside together lineally descendants from a common ancestor. So joint Hindu family definitions say that all male female who reside together will lineally descendant from a common ancestor. That family will be called a joint Hindu family. But there's a difference between this definition and the definition of HUF. HUF definition is almost same, but there is a slight difference. If male females reside together, those are linearly descendant from a common ancestor, that family will be called a joint Hindu family. But for example, there is a family in which four brothers, Ram, Lakshman, Bharat, and Ravan. He's the most important person, of course. Let's take an example that there are four brothers in a family: Ram, Lakshman, Bharat, and Raman. Ram is doing his job, he's getting salary. Lakshman is doing his job, he's getting salary. Bharat is doing his business, proprietorship business. And Ravan is also doing his proprietorship business. So they all technically under income tax will be treated as individual because they are the individual owner of their income. They are the single owner of their income. As Ram is getting salary, he is the owner, he will be called an individual. Lakshman will be called an individual. Bharat is doing a proprietor business, he will be called an individual, and so on. Ravan will be called an individual. So in this case, there is only joint Hindu family because they are living together in a same place. So they will be called a joint Hindu family, but they will not constitute a Hindu undivided family. So what we need to constitute a Hindu undivided family if they agree to start a business. If they agree to start a business as a partnership firm, then still it will be called a partnership firm, not HUF. As a company, then it will be called a company, not HUF. But if they start a business together and as a registration as a HUF, then this family or this business will be fall under income tax as a Hindu undivided family. So what is the difference between a joint Hindu family and a Hindu undivided family? So if these family members reside together and earn income individually, then it will be called a joint Hindu family only. But if they comes together and earn income jointly and registered that business as a Hindu undivided family, then they will be called a Hindu undivided family. That income is generated from that HUF will be taxed as per HUF income under income tax. There is no necessity that all four brothers should start a business. It might be Ram, Lakshman, Bharat start a business. Any two or more can start a business and registered it as a HUF. In that case, that HUF income will be treated as Hindu undivided family income under Income Tax Act. Clear? So HUF is not defined, and the Income Tax Act, this definition is derived from the definition of joint Hindu family, which is described in Vedas. Under Hindu law, it is defined as a family which consists of all persons. The definition I have told you has been written here. The elder co-partner of such HUF is called Karta. There are one co-partner and there are members. Who is co-partner? Who are members? Those who have taken birth in the family, natural birth in family, they'll be called co-partner. And they're part of the family, but they're not naturally born in the family. They'll be called members. Like in your Hindu family, you are the co-partner. Your father is a co-partner, his grandfather is a co-partner, your sister is a co-partner. But your mother, grandmother, wife, they are not co-partner. They only have the power of member. What is the difference between a member and a co-partner? We will also discuss it. I have already made a diagram for it. We will discuss it. Types of HUF, we have two types of HUF, Dayabhaga School of Law and Mitakshara School of Law. We are not going to discuss in detail because you've already discussed this topic in your intermediate and we have to cover a lot of pages more. What is the difference between Dayabhaga and Mitakshara? Dayabhaga is applicable in the Hindu families of Assam and West Bengal, and Mitakshara is applicable in the remaining Hindu family. Why it is applicable in Assam and West Bengal? I asked you and some of you also tried to give me the answer, but it's okay. Actually, Assam and West Bengal were technically is the more conservative state. I'm not taking the poor state, I'm taking the conservative because they have actual very strong family values. Generally, the son, the father follows the order which they receive from the head of the family, like the grandfather. So they are more into that family structure, like very conventional kind of thing, very conservative kind of family. They follow the rules. And the other states like UP, Delhi, Maharashtra, etc., we are like more modern into it. Government thinks so. So in that case, the concept of Dayabhaga is more suited to the Assam and West Bengal in comparison to the other states. Fine. Under Dayabhaga, father work as individual if he has no brother, and his son, daughter can be only become the partner and can create HUF only on the death of father. While under Mitakshara, son, daughter become the co-partner automatically on his birth, and father and his son, daughter can create HUF only on the birth of his son or daughter. Under Dayabhaga, son, daughter cannot demand partition. There's a basic difference. Under Dayabhaga, whether you are a HUF, whether you are a JHF, you cannot demand partition until the father alive. After the death of father, you have the option to create an HUF or to demand the partition. Only after the death of father, the son, daughter can create HUF or demand partition. Under Mitakshara, son, daughter can demand partition by his or her birth. Father and children cannot be the part of same HUF under Dayabhaga. Obvious. Why? Because only after the death of father, children's son or daughter has the power to enter into an HUF. So either the father survived, till then you cannot enter into the HUF. Under Mitakshara, father and children can be part of the same HUF. Under Dayabhaga, different HUF created on death of father, but under Mitakshara, same HUF continue. You can continue the same HUF. Under Dayabhaga, this is a very important thing. Under Dayabhaga, HUF cannot be created on the marriage of individual. Under Mitakshara, HUF can be created on marriage. Under Mitakshara, we need only one co-partner or one member. If there is a one co-partner or one member, you can create an HUF under Mitakshara. So after marriage, if there is Mr. A and he get married Mrs. A, then there are now two persons in the family. And one is a co-partner, which is Mr. A, and Mrs. is a member, but they can create a HUF. Note, Jain, Sikh and Buddhist families will be treated as HUF, JHF for the purpose of Income Tax Act. Now, this is again very important. Why only these three? I told you, there's a thing we call provision. There's a thing we call reason. So can anyone of you can tell me why Jain, Sikh and Buddhist families are treated same as HUF or JHF for the purpose of Income Tax Act? The reason is very simple. The originator of these three religions are technically Hindus. And these three religions originated from India. Like in case of Jain, the originator is Bhagwan Rishabh Dev, or we call them Bhagwan Adinath. and we assume that he technically the part of Lord Shiva. So Shiva is Hindu, so we call them Bhagwan, Rishabdev, etc. also treated as in Hindu. In case of Sikh, Guru Nanak Ji was technically the god, and he was also a Hindu before he started a new religion. In case of Buddhism, there is Gautam Buddha was the originator, and he was Raja Siddharth, who left all his property, kingdom, etc., and become Gautam Buddha. So all these three were technically Hindus, and origination of these three religions has been started from India, which is not in any other religion, not in case of Muslims, not in case of Christian. They are originated, do not have any connection with Hindu, and the origination country was not also in India. Clarification that is regarding HUF. I need to discuss this. Fine. Under HUF, there is a very special provision regarding the females. What has exactly happened with the females? Like if we're talking about the joint Hindu family or Hindu undivided family, females provisions was something like this. There's a date, this was 6 September 2005. Before this date, females up to marriage, I have already made a diagram of it, a chart of this, you can see from there also. Up to marriage, females will be called members of their father HUF or JH. They generally called and treated as a member of their father JHF or HUF up to marriage. And after marriage, the member status in father JHF or HUF has been finished, and they will be called member in their husband HUF or JHF only. So till marriage, she will be the part of her father JHF or HUF, and after marriage, she ceased to be a member in her father JHF or HUF and become a member in her husband JHF or HUF. But on or after 6 September 2005, position has been changed. The amendment in Hindu Succession Act, and which has changed the female position after this judgment. Now, up to marriage, we all know now they are called co-partner in their father JHF or HUF. And after marriage, they will continue to be the co-partner into their father JHF or HUF and become the member in her husband HUF or JHF. This is very interesting. So for examination purpose, we do not need to know this provision. I just told you this because you should understand the difference between the provision that was earlier and now what is the exact provision now. So for examination purpose, we need to understand this only. So what is the provision for females? That females will be continued with the co-partner even before marriage or after marriage. Even after marriage, they have two kinds of family properties, right in family properties. One's in their father property as a co-partner and one in her husband property as a member. Now, what is the difference between a co-partner and a member? There's a very important difference between a co-partner and member. Co-partner can demand partition. They can demand partition. If you're a co-partner in a property, you can demand partition and you can receive partition also if somebody else has demanded that partition. So in case of co-partner, you have the right to demand the partition and you can technically receive the partition also. But if you are a member, then you can only receive the partition when it has been demanded by some co-partner. You cannot ask for partition. You cannot ask for partition if you are a member. So a daughter can ask partition in her father's property anytime, before marriage or even after marriage. If it is a mitaksha, if it is a dayabhaga, then only after the death of the father. But in her husband's HUF, she cannot demand partition. She has to wait. She has to instigate her husband, go, ask for partition, go, do something, ask for partition, go, fight with your family, ask for partition. When the partition will occur, then she will have right to receive her share. So this is a difference between female position before and on after. I have already made the diagram. You can see in the notes, of course. So back to our notes. Old provision is whatever we have discussed, and these are the new provision with effect from 6 September 2005. So position with effect is September 5. However, even if there will be one male member and one female member, it can be a HUF. To create HUF under Dayabhaga or Mitaksha, one co-partner is essential. Even two female can create HUF provided one of them must be co-partner. Like a daughter and her mother can create a HUF. But a mother and grandmother, if in a family there is only two female, one is a mother and one is a grandmother. Now they both are only member. They cannot create a HUF. After the amendment of the Hindu Succession Act, the daughter, not for spouse, of a co-partner shall by birth become a co-partner in an own right, in the same manner as the son, daughter. Now, AOP, we all know that association of two or more persons who join for a common purpose, and those are not registered anywhere. So, if you have association of two or more persons and you are not registered anywhere, you will be called an association of person. Fine. Body of individual, an association of only individuals who carry on some activity with the object of earning some income. So, if you are receiving income on behalf of someone else, that means you are not the owner of income. Then these individuals will be called body of individuals, for example, executors, etc. Partnership firm, we all know as Section 4 defined of Partnership Act 1932. That means partnership, and LLP as defined in Limited Liability Partnership Act 2008, that will be called a LLP. Company definition is quite lengthy in these provisions. Let's discuss it. For all the purpose of the Act, the term company has much wider connotation under the Companies Act. An Indian company defined in Section 226, that is a company. Any body corporate incorporated by or under the law of country outside India, that is also a company. Any institution, association or body which is assessable or was assessed as a company for any assessment year under the Indian Income Tax Act 1922, or for any assessment year commencing on or before 1/4/1970 under the present Act, or any institution or association which is declared by CBDT as a company will be called, of course, a company. Classes of company, we have domestic company. It means an Indian company. Indian company will always be a domestic company. And other than Indian company, if they have made the prescribed arrangement for paying tax and distribution of dividend in India, then those, if even they are foreign companies, they will be treated for the purpose of income tax. That will be called domestic company. So it means an Indian company is always treated as a company. Any other company which in respect of its income liable to income tax has made the prescribed arrangement for the declaration and payment of dividend within India, payable out of such income. Indian company means those are registered under Companies Act 1956 or now 2013. The registered office of the principal office of company should be in India, of course. A corporation established under the Central State or Provisional Act like Financial Corporation, State Road Transport Corporation, they'll also be treated as an Indian company for the purpose of Income Tax Act. An institution or association or body which is declared by the board to be a company under Section 217, a company formed and registered under any law relating to companies which was or is in force in any part of India other than Jammu and Kashmir, that will also be treated as a company. In case of a Jammu and Kashmir, a company formed and registered under any law for time being in force in Jammu and Kashmir, when Jammu and Kashmir was a state. So this Companies Act 1956 and 2013 was not applicable there. So there are separate state Companies Act. So if you are registered under that separate Companies Act, you will be treated as Indian company also. In the case of any union territories of Dadar, Nagar Haveli, Goa, Daman and Diu, etc., that will also be present Indian company. Their registered office should be in India. Foreign company means the company which is not in domestic company. Those not a domestic company will be called a foreign company. Of course, company in which public are substantially interested. Those company in which public are substantially interested will be called under section 218 company. The following company are said to be company in which public are substantially interested. I prefer you should read it out. Of course, you have already been discussed these sections on your intermediate classes. So I will prefer to discuss those sections which has something new for you. The rate of taxes, surcharges. So you can read it out. It's very simple for reading. If you have any query, you can ask me. I am here. Do not worry. I will answer everything. Per person having substantial interest. That's a very important definition. It will be useful under your salary head also. It will be used in the clubbing provision also. That what is the meaning of substantial interest? So substantial word means something more than normal. That's called substantial. That is something which is more than normal. So when we will say a person has a substantial interest in a company, because if you have a substantial interest in a company, the provision of tax will be changed. And if you do not have substantial interest in a company, the provision of tax will change. You will see it when you will read salary chapter, clubbing chapter, deemed dividend provisions, etc. They are the cases when this term will be used. Substantial interest means when you have a voting right of 20% or more in any company, then you will be called a substantial right in that company. Person is the beneficial owner of shares, whether with or without a right to participate in the profit, carrying at least 20% of the total voter power, at least 20. So 20% or more. In that case, you will be called that you having a substantial interest in that company. Local authority, government department, those work on local level, that will be called local authority. AJP, those persons do not fall in the above categories, above 7 category, will be treated as an artificial judicial person, and that includes God also. All the person which are not included in the above category will fall under this category. This category refers to those entities which are not natural person but are separate entities in the eyes of law, including God. So we think God is above all, but let me tell you, income tax is on God also. Universities, college, ICAI, ICSI, God, etc. These are the examples of artificial judicial person. Now we have the definition of income. Definition of income. So let's move on the definition of income. The definition of income as per Income Tax Act 1961. Technically, we have two kinds of income, like a revenue receipt or a capital receipt. Revenue receipts or capital receipts. Revenue receipts generally are taxable. There are certain revenue receipts, those are exempted by government also. And capital receipt generally exempted. But there are certain capital receipts which has been taxed by government also. What is the difference between a revenue or capital receipt? That depends on a lot of factors, but I can explain the meaning in short. Revenue receipt means when you getting a regular payment from some definite source of income. Understand? When you are getting a regular payment, regular income from some definite source of income, that generally called revenue receipt. And if there is not regular, the source is not definite, then we can call it, of course, a capital receipt. Whether it will be going to be taxed or not, that's a different aspect. So income includes, therefore, it is an inclusive definition and not an exhaustive one. Such a definition does not confine the scope of income, but leaves room for more inclusion within the ambit of the term. Section 224 will explain from point number A to point number W the definition of income. And because you have already cleared intermediate, so a lot of income you have already known. That we all know that we have 5 heads of income. One is the income from the head of salary, income from house property, income from business and profession, income from capital gain, and all other chargeable income will be fall under income from other source. So salary head charging section is 15, which tells us what income is going to be included under salary head. Then we have income from house property charging section 22. Explain what will fall under house property. Then we have section 28 charging section for PGBP. Then we have section 45, that is charging section for capital gain. And then we have section 56 for income from other sources. So these are the definitions. These things disturb us, whatever we are going to study in section 224. It technically confuses us. When we studied in first chapter of intermediate, at that time students think, what is this profit and gain? What is this voluntary contribution? What is this salary? What is this perquisite? But because you already go through that part, you know what is the meaning of now profit and gain. So this is very simple topic on final level, which is very disturbing, which is very confused topic at the level of intermediate. Now it is very simple at your stage. So incomes are profit and gain. We know what it is: dividend, voluntary contribution, the value of perquisite or profit in lieu of salary, of course, special allowance or benefit, allowance is granted to the assessee, any benefit or perquisite, then value of any perquisite and perquisite and benefit. Also again, deemed profit, section 4159, profit and gains of business, capital gain, section 45. There are certain points which you didn't read in your intermediate. That will fall under our final level also. When you read the chapter of trust, etc., you will come to understand a lot of new words. Then you will understand what is the meaning of these sections. Like deemed profit, section 41 to 59. There are certain sections you will read over here also. But more or less, you at least know the word what we are going to study in which section. Like capital gain, section 45, profit and gains of any insurance business, profit and gains of any business of banking. There is a business profit of banking. Winning from lottery, we all know that is a casual income. It will fall under income from other sources. Then we have sum received by contribution to any provident fund, ESI. If employer is receiving any sum from its employee for PF and ESI, that will also be treated as the income of employer until he is going to deposit it within time, as per section 43B says. Any sum under Keyman insurance policy, we all know what is the meaning of a Keyman insurance policy. So if we receive any amount, and there is a different situation. If the Keyman insurance policy received by the employer, that will be taxable under his PGBP head. But if it is received by employee during service, it will be salary receipt. And if it is after service, it will be his income from other receipt. Section 28, and thus any sum, whether received, recipient, cash or kind, for under an agreement for not carrying on any activity. This is also we have studied in section 28. It's a very important thing. If you're getting any money for not carrying out any trademark or not using any copyright, etc., so you are getting something for not doing business, that will also be treated as your business income. Like fair market value of inventory as the date on which it is converted or treated as a capital asset, of course. This is also a part of section 28. You will going to read in PGBP head, and also the vice versa part under capital gain chapter. Any consideration received for shares that exceed the fair market value, income from other source, any sum of money received advance, if such sum is forfeited, advance money forfeited initially till 2012, that was a part of section 51 of capital gain. But now after 2012, it has been transferred to section income from other source, section 56. So now we are talking about the present, and now this advance money forfeited will be your income as income from other source. Any sum of money or value of property received without consideration. This is also a specific provision for gifts, etc. That is monetary consideration. That is a monetary value, non-monetary asset, monetary asset. And in that case also without consideration or inadequate consideration. You have already discussed it in your intermediate level. Any compensation for termination, etc. Of course, subsidy, etc. So these all from point number A to W. These are the part of your different chapters, either in intermediate level or you are going to discuss in your final level. So do not take tension of these points, because later or sooner you are going to read all these provision in details. The concept of income, in this basic concept chapter, whatever we have studied till now, I think this is the provision which is really important. This is the provision you should understand, because on these provision, question can be framed. I am not saying that question cannot be framed on previous provision we just read today. No, it can be, of course, it can be framed on those provision also. But for my point of view, These are some technical provision, and these are not only important in this chapter. These are directly and indirectly connected to your PGBP and capital gain chapter also. When there will be question about what is your capital receipt, what is a revenue receipt, you should taxable it or not. So these provisions are very important for it. So let's discuss it. So I know you might be waiting for a break, but I'll give you a break after 10 or 15 minutes. Fine. So let's discuss this topic, and after completing this topic, I'll give you a break. Relax. Fine. And we have an MCQ test also. Fine. So remember what I'm teaching to you. These are going to be asked in your MCQ test. So regular receipt vis-a-vis casual receipt. Income in general means a periodic monetary return which accrues or is expected to accrue regularly from a definite source. That will be a regular receipt like revenue. However, under the Income Tax Act 1961, even certain income which do not arise regularly are treated as income tax for the purpose, for example, winning from lotteries, crossword puzzles, etc. Revenue vis-a-vis capital. Income normally refers to revenue receipt. Capital receipts are generally not included. I'm not saying that capital receipts are not income, but generally not income, but there are some exceptions also. Within the scope of income in general parlance, however, the Income Tax Act 1961 has specifically included certain capital receipt within the definition of income, that is capital gain, gain on sale of asset like land, etc. Net receipt vis-a-vis gross receipt. Income means net receipt, like net profit, not sale. We are not going to tax your sale. It's a part of your GST, etc. We are going to charge tax on your net profit, not even gross profit. So that is, income is taxable only after deducting the relevant or allowed expenses. After the deduction of those expenses, whatever we will receive, that is going to be taxable. So income means net receipt, not gross receipt. Net receipt are arrived at after deducting the expenditure incurred in connection with earning such receipt. The expenditure which can be deducted while computing income under each head is prescribed under the Income Tax Act 1961. Cool. Due basis with receipt basis. Like income can be taxed on due basis as well as receipt basis. There are certain head in which you can tax the income on due or receipt as the case may be. But in some case, they are going to be taxed on only receipt basis. Income is taxed either on the due basis or receipt basis for computing income under the head PGBP and other sources. The method of accounting regularly employed by the SEC should be considered, which can be either cash or mercantile. So we have option to tax our income under two heads only, like PGBP and other sources on due basis or receipt basis, which should be suited to our nature of activity. Some receipts are taxable only on receipt basis, like income by way of interest received on compensation or enhanced compensation. You will read it in capital gain chapter. Concept of revenue and capital receipt. Students should carefully study the various items of receipt included in the definition of income. Some of like capital gains are not revenue. However, since they have been included in the definition, they are chargeable as Income Tax Act. The concept of revenue capital receipt is discussed hereunder. Just a minute, let me see how much queries are there. Okay, not much. Fine. The Act contemplates a levy of tax on income and not on capital, and hence it is very essential to distinguish between capital and revenue receipt. Capital receipt cannot be taxed unless they fall within the definition of income. So the distinction between capital and revenue is material for tax purpose. That is very important. On this base, examination question has been framed to just find it out. What is a capital receipt and what is a revenue receipt? Certain cap receipts which have been specifically included in the definition of income are compensation for modification or termination of service, income by way of capital gain. It is not possible to lay down any single test. There is no single test to find out whether it's going to be a revenue or capital. There can be circumstances, there can be situation, etc. as infallible or any single criteria as decisive. final and universal in application to determine whether a particular receipt is capital revenue nature. Hence, the capital or revenue nature of the receipt must be determined with reference to the fact and circumstances of each case. Now, what is the criteria? First one is fixed capital or circulating capital. A receipt referable to fixed capital would be a capital receipt, whereas a receipt referable to circulating capital would be a revenue receipt. The former is not taxable while the latter is taxable. Tangible and intangible asset which the owner keeps in his possession for making profits are in the nature of fixed capital. The circulating capital is one which is turned over and yields or loss in the process. Income from transfer of capital or trading asset. Profit arising from the said sale of capital asset are chargeable under section 45 of course, and the profit arising from the trading asset will be chargeable as section 28 as a business income. The sale in the regular course of business or a transaction constitute an adventure in the nature of trade. Capital receipt versus revenue receipt has to be applied. Transaction entered into the course of business. Remember, profit arising from transaction which are entered into the course of the business regularly carried on by the assessee are incidental to or associated with the business of the assessee would be revenue. So if you're generating any profit which is directly, indirectly connected to your business activity regularly, that will be called your revenue income. For example, a banker's or financier dealing in foreign exchange, for sale of shares and securities, a shipbroker's purchase of ships in his own name, a share broker purchase of share on his own account would constitute transaction entered and yielding income in the ordinary course of their business, whereas building and land would constitute capital asset in the hands of a trader in the shares. The same would constitute stock in trade in the hands of a property dealer. For example, if a share broker is selling shares, that income will be his business income. It will be a revenue receipt. But if I invest in some shares and held it for long term and then sell it, then it will not be treated as my revenue income. That will not be my business income. So what will be your revenue income? What will be your capital income? That will depend upon the nature of business you are involved, the nature of activity, and many more things also in certain conditions. Profit arising from sale of share and security. In the case of profit arising from the sale of share and security, the nature of profit has to be ascertained. There is no fixed formula. That depends upon the type of work, the type of activity, the frequency of transaction you have been doing. Has to be ascertained from the motive, intention or purpose with which they were bought. If the shares were acquired as an investor or with a view to acquiring a controlling interest, or for obtaining a managing or selling agency or a directorship, the profit or loss on their sale would be a capital nature. So, if you are purchasing shares for the purpose of investment and then sell it, it will be your capital receipt. But if you purchase shares and sell in an ordinary course of business, it will be your revenue receipt, and the shares will be treated as your stock in trade, of course. A single transaction, can it constitute business? Of course, yes, it can. Depends. For example, a person open a garment shops. He thinks he will open a garment showroom. He opens a garment showrooms, and after 2 days of business, he shut it down. He thinks he will not able to run it more. So the purpose for running a business, whether it works for only 2 days or 1 day, it does not matter. So whatever income or loss he generated from that activity for only 2 days, that will fall under his business activity, because the intention, because the nature was carrying a business. Whether it worked for a single day or a single transaction, it does not matter. Even a single transaction may constitute a business or an adventure in the nature of trade, even if it is outside the normal course of assessee's business. Repetition of such transaction is not necessary. Thus, a bulk purchase followed by a bulk sale or a series of retail sale, or bulk sale followed by a series of retail purchase, most constitute an adventure in the nature of trade, and consequently, the income arising therefrom would be taxable. Fine? Simple. Liquidated damages. The receipt of liquidated damages directly and intimately linked with the procurement of a capital asset. We have a very interesting case regarding this also. In our case law part, which we will discuss, there's a very important case law regarding this case, and that is that important that it might be, can be asked in your questions, of course, in your examinations, which lead to delay in coming into existence of the profit making apparatus is a capital receipt. The amount received by the assessee toward compensation for realization of the profit earning source is not in the ordinary course of business. Hence, it is a capital receipt in the hand of the assessee. Compensation on termination of agency, that we already discussed. Section says, when an assessee received compensation on termination of agency, now the question arises, either that compensation for all his business activity or is one or more of activity. If you have 10 agencies and if you are receiving compensation to shut down one of those agencies, so is it a case of shutting down one or more agency or is shutting down all agency? It will depend, and then we will decide whether it's a capital receipt or a revenue receipt. Where an assessee receive compensation on termination of the agency business, being the only source of income, the receipt is a capital nature. Under section 28 second C, however, where the assessee has a number of agencies and it acquired such agency in the normal course of business and one of them is terminated and compensation received, therefore, the receipt would be of a revenue nature, since taking agency and exploiting the same for earning income is the ordinary course of business, and the loss of one agency would be made good by taking another. Compensation received from the employer or from any person for premature termination of the service contract is a capital receipt, but is taxable as a profit in lieu of salary. We have already studied this in our salary chapter, right? Section 17.3, or is income from others under section 56.2, respectively. Compensation received or receivable in connection with the termination or the modification of the terms and condition of any contract relating to its business shall be taxed as business income. Gifts are a capital receipt. In some cases it is taxable, in some cases they are exempted, and the chapter income from other source has been made in detail for these provisions. The term India means, you can read it out, it's simple definition. Now we are moving on to our numerical topic, and that's really more interesting. Maximum marginal rate and average rate of tax. So what is average rate of tax? Average rate of tax means the rate which is, you can find out by a formula, the total tax divided by the total income into 100. The average rate of tax means the rate arrived at by dividing the amount of income tax, calculating of total income by such total income. It's simple, you already know all these things are simple, very simple thing. What is maximum marginal rate? To mean the rate of income, tax, including surcharge, etc., everything, including cess, applicable in relation to the highest slab of income in the case of an individual, AOP or BOI. We called it maximum marginal rate of tax. So in case of individual, the highest rate of tax is 30%, the highest surcharge rate is 37%, and the cess is 4%. So if we combine all this, then we will get a maximum marginal rate, and that is 42.744%. Fine. We have the definition of previous year assessment year. You all know that. We are not going to discuss it, of course. We know. Business profession newly set up. We already know this thing. Now we have two topic left before we start to our numerical things. That is, one is for previous year for unexplained cash, credit, investment, etc. And this is also the part of your intermediate course also. So if you have black money, so how do we find the previous year and earning year? So in case of black money, always the earning year and previous year will be different. And in case of white money, the previous year and earning year will be same. What is exactly the black money and white money? This concept is, if I earn 50 lakh rupees in a year and disclose 40 lakh to the government and pay tax on 40 lakh, that means out of that 50 lakh, I have disclosed to the government that I have earned 40 lakh. The 40 lakh rupees earning year and the previous year will be same. But the 10 lakh, I have not disclosed to the government. The earning year will remain the same this year. But after 5 years, government find that 10 lakh rupees. And the previous year will be that year in which government will find that money. So in case of black money, it's a universal rule that earning year and previous year will be different. And in case of white money on which we want to pay tax, we had paid tax, we declared to the government. The earning year and previous year will be same. So cash credit, of course, you already read these topics, and in case of intermediate, I have to discuss these topics very deeply. And I have 2 lectures for the basic concept, but because you are in final, so you should also know that these are basic concepts. You already know about these things. So I have only 1 lecture to cover each and everything. So cash credit, we can summarize in a simple way. I have already made a diagram of also and uploaded it also. So when any sum is found created in the books of an SSC, an SSC have no explanation or not a satisfactory, then that income will be treated as your black money or undisclosed income. And the year in which that entry has been found out, that will be called the previous year of that income. Fine. Unexplained investment, same condition. If you have investment, but you have not recorded those investment in books of accounts, and income tax find those investment later on. Then in the year they find that investment, that will be called the previous year for that income. The investment value will be treated as your black money, and the previous year will be the year in which government find that investment value. Unexplained money, it is the vice versa case of point number 1. In point number 1, we find unexplained entry, not money. And over here, we find unexplained money, no entry. That means we have found the money, but there is not disclosed to the government. So SSC is found the owner of any money, bullion, jewelry, or other valuable article. And of course, not recorded in the books of accounts or no explanation provided. That will be treated as your black money. I know you all need a break, just 2 minutes, and I'll be going to give you a break. Fine. Amount of investment not fully disclosed. If you did not disclose your investment fully, then the undervalue value will be treated as your black money. Here is the example. You can read it out, and if any problem, I'll sort it out. Unexplained expenditure. If you incur any expenditure and that is not matching with your income, your white money, then the difference will be treated as your black money. 6 point, amount borrowed or repaid on hundi, where any amount borrowed on hundi or any amount due thereon has been repaid other than an account pay check drawn on a bank, the amount so borrowed or repaid will be treated as the deemed income of the person borrowing or repaying. The same person. Who's the borrow? Who's the repaying? The same person. If A borrow, then A is going to repay it after. So we are talking about the A. So the person who will borrow or repay the amount, that income will be treated as his black money if he is not paid via account paid check, etc. But if any amount has been deemed as his income on borrowing, then it will not be again treated as at the time of repayment. For example, he borrowed 10 lakh rupees in cash and repay 11 lakh. So 10 lakh has been taxed at a time of borrowing, and when he pay 11 lakh, only 1 lakh, which is like interest, is going to be treated as undisclosed income. Whatever income will fall under undisclosed income, that is going to be charged with a rate of 78%, 60% tax, 25% surcharge, and 4% cess. The effective rate is 78%. No deduction, no exemption, no allowances will be allowed out of these above income. So we have a section also, we will discuss it, is very short, and then we'll move to our rate of tax provision. So after this, our theoretical provision will complete. So let me check the queries, then I'll give you a break. Or I can do one thing, I can take the queries after the break. Let me see. Let's do one thing. We'll meet after 10-minute breaks, and I'll take the queries first. Whatever you're going to ask, you can send me your queries, and then we will start our rate of tax topic. Fine. So, Mr. Ram, are you there? Yes, 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 please. Okay. Hello? Okay. You're live? Good. Welcome everyone. So we are back our after break. So we were discussing this section. Let me complete it fast. Then we'll move on to our numerical topic. Fine. So this is now we are going to discuss cases in which income of previous year is assessed in the same year, or exception of the rule that income of previous year always taxed in assessment. So what was the provision? Generally, the income of previous year will be taxed in next year, that is assessment year. But there are certain cases. When your white money income is going to be taxable in the previous year. So the previous year and assessment year will be same in case of white money also. But they are genuine cases. Like non-resident shipping business under section 172. These are the cases in which government thinks that if we are not able to collect, if we didn't collect the tax now, then might be we are not able to collect this tax later. So non-resident shipping business cases, if a non-resident who is carrying on a shipping business comes to India and earn income for that, then before leaving India, income tax is charged on such person, or such person has to make prescribed arrangement for payment of tax of such income. In this case, 7.5% will be treated as his income. In this case, 7.5% will be treated as his income. And on that amount, he needs to pay tax. So that will be treated as his profit. When your white money income is going to be taxable in the P. Next, just a second. Okay, the second case was assessment of person leaving India. So assessment of person leaving India says when it appears to the AO that any individual may leave India during the previous year and has no intention to come back into India, then total income of such individual of that previous year will be taxable in the same year. This is an example. You can read it out. This is a very simple topic. Assessment of AOP, BOI, AJP form for a particular event or purpose. These kind of AOP, BOI, AJP, those formed for a particular purpose or event, needs to pay tax in the same previous year in which they earn income. Assessment of person trying to transfer his asset with a view to avoid tax. So there is a person who trying to avoid tax, who wants to earn income in the previous year and going to be somewhere else from where income tax might not be able to collect the tax. So if AO thinks that person is likely to avoid tax, then what he can do? He can charge the tax in the same year. Here's an example. You can read it out. Discontinued business is every business or profession discontinued in the previous year. The income from the start of the previous year up to the date of such discontinuance may be assessed to tax in the same year also. So in this example also, you can read it out. I want to move on our further topic. Now this is charge of income tax, section 4, that is tax shall be charged the rate prescribed for the year by annual finance act. Chargeable to tax on section 231, income of previous year will be taxed in the assessment year, except some exception. Tax shall be levied in accordance with the subject to the provision contained in the act. So that was chapter 1 theoretical concept ends. Now we'll move to our other topic. So this is our new topic, and that is income tax rates. So before discussing income tax rates, let me see the queries and let me answer whatever you have been asked. So last time, queries by Pawan is asking why did tax rate need to be reduced in finance bill, whether the central government is planning its income and expenses by changing rate of income tax. That's a very difficult question to be answered over here, because government has so many different things, so many different policies prescribe the reason behind it. So we do not have time to discuss all these things. And this is also not part of our chapter. So please focus on the topic we are discussing. Why is very difficult. Why is very complicated word to describe. Because these three are covered in Hindu religion. Correct, Namita Goyal? You are right. High five. You are right, actually. These are in Hindu religion covered because originator and the origination from India. Correct. Okay, Harshad Goyal is asking, sir, if father do not have HUF, then son can create HUF even both are alive. Under Daya Bhaga, you cannot do it. But in the Mitakshara, they can do it, of course. But son cannot create HUF alone. There must be someone else also. Might be a co-partner, might be a member. A single person cannot create an HUF, of course. Namita Goyal again asking, sir, why just by paying dividend foreign companies treated as foreign company? Again, please don't ask a why, because there's very different reasons against each and every provision made by government. And we are not able to discuss it over here because we have already shortage of time and we need to cover actually the whole topic over here. But if you want to seriously want to know about this thing, you can Google it. You can find it out what's the reason behind it. Namita will ask me, sir, please give example how income tax can be collected from God. Okay, you must have been studied in your intermediate also. God, if there is a temple, so the owner is technically God. So whatever we are offering in that temple, so we are technically offering to the God. So that is the technical income of God. But God is not going to come and pay tax. So on the behalf of God, the trustees, the pujari, the priest, they are going to deposit tax on behalf of God. So the way, like from the that priest or that temple or the mosque or the church or the gurdwara, the income is technically related to belongs to the God, but the representative going to pay tax. So via trust, etc., they technically pay tax. Clear? Okay, again, Namita Goyal, sir, please, okay, fine then. Namita Goyal, sir, as capital is taxable, so why on page 1.22 fixed capital parrot is written is not taxable? No, it's not like that. Not all capital receipts are taxable. Not all capital receipts are exempted. General rule is this, that capital receipts are exempted, generally. But there are some special cases in which they are going to be taxable. Under the head capital gain, under the head salary income, under the head PGBP, under the head you can say income from other sources as gift, etc. So there are certain cases. We are not saying that they are totally exempted or taxable. It depends upon case to case basis. So that's a general view that they are not taxable. But it is not like this. There are certain cases when they are taxable and there are certain cases when they are exempted. Even revenue incomes are not taxable. All revenue incomes are not taxable. There are exemptions. There are income which are not taxable also. Okay, now next is how to determine intention to return to India. Janki Bhatt is asking via visa. In visa, it has been written that the time duration you want for the holidays or you are going out of India. So if there is written that you are going for a job, you are going for a marriage, you are going for a business occupation there, then the intention will be read as not returning to India. But if it's looking like traveling or only 10 days, then it will be read as that you are going to return back to the India. So by a visa, you can find it out easily. Father can be co-partner and mother can be member in son HUF. Yeah, mother will always remain a member in HUF, whether it's her husband HUF or her son's HUF. It doesn't matter. Father can be a co-partner, of course. So that was the queries we will take after 40 minutes. Now moving on to our chapter, and now we are going to discuss the numerical part of it. Clear? Income tax rates. Some are destined to succeed and some are determined to succeed. So all we are saying, we are determined to succeed. We will be a CA later or sooner, and I hope it should be sooner, as soon as possible. So I told you initially that you should create interest in studies, and how you can do it. You all must have some dreams in your life. Like some of you might need a big car, a luxury car, a luxury house, respect, or you want your parents to be proud of you, and might be you want to go out of India, you want to travel, you want to buy things, you want to buy branded clothes. These are our dreams. We all have these kind of dreams. So whenever you think that you are getting bored, you are feeling that studies are burden, then think about it. Whatever your dreams are, you can achieve them via these books, notes, and studies only. So if you want a good life, if you want a better life, you want a great life, if you want a respect, money, anything, you just need to study. That's it. That's it. It's not that complicated. It's not that difficult. Because I know few people, I know few students, I know few persons, those want to study. But due to their personal problem, family issues, financial crisis, they are not able to study. And look what your institute is doing for you. They are providing you free lectures. How great it is. Like in our country, there are engineering colleges, there are medical colleges, there are other institutes. Nobody has done this. But your institute, actually think about those students, those not able to pay, those not able to transport, those might be not able to pay the fees of coaching classes, etc. Institute think about, and they provide this golden opportunities to all those students and everyone. Let me tell you, institute is doing beautiful job for you, and we should appreciate it. We should be thankful to institute that you are getting free classes, and it's for that institute is paying to the faculties and finding the best faculties in India. Gradually, there might be some things which might be a problem in this, but they are actually trying to make a bridge for you so you can change your life and you can fulfill your all dreams. So when you feel that you're not interested in study, then can create an interest just by thinking this, that I'll get a car if I'll pass. I'll get a house if I'll pass. I'll get a good life if I'll clear these studies, if I'll study whatever it is. So please focus and study. Be a chartered accountant as soon as possible. And I know you can, you all will. Fine, so now moving on to the rates of taxes. So in case of, initially we are discussing about the rate of tax for individuals. There are three categories of individuals. One are resident, those age is 60 years or more, but less than 80 years during previous year. Those are resident, age is 80 years or more. And all other individuals, which cover resident, age less than 60 years technically, all non-resident, plus HUF, AOP, BOI, and AJP. So we are going to discuss the tax rate for these persons. So if you are falling in the category of A, or we can say B, or we can say C, so we can understand the rate structure like this. Imagine there is an income train and first stoppage is 5 lakh. Imagine we have an income train, a tax train, and the first stoppage is 5 lakh. The second stoppage is 10 lakh. And then it's exceeding this. So if any income fall in this stop, our first stop, the tax rate will be 5% if it is going to be taxed. So the tax rate till 5 lakh is 5%. And the income which will fall exceeding 5 lakh up to 10 lakh will be going to taxable at the rate of 20%. That means next 5 lakh rupees. So up to first 5 lakh, tax rate will be 5%. The next 5 lakh rupees, tax rate will be 20%. If it exceeding 10 lakh, then the tax rate will be 30%. Clear? Now, if you fall in this category, then 3 lakh rupees income is tax free. If you fall in this category, then 5 lakh rupees income is tax free. And if you fall in this category, then 2,50,000 is tax free. Initial 2,50,000, initial 5 lakh, and initial 3 lakh rupees tax free as per the provision. Now, if we see for case number A, out of this 5 lakh, 3 lakh is tax free. That means only 2 lakh is going to be taxable with the rate of 5%. Simple. If you earn 5 lakh rupees income and you fall in the category A, that means out of that 5 lakh, 3 lakh will be free as per exemption limit. Government has made an exemption limit up to rupees 3 lakh. So there will be no tax up to 3 lakh. And balance left is 2 lakh. So tax will be charged at the rate of 5% on 2 lakh. That will be 10,000. And if any income which fall out of this, that is going to be taxable for at the rate of 20%. For example, Mr. A, which falls in category A, has 12 lakh rupees income. Now what we will do? We have an income train of 5 lakh, then again 10 lakh, and then over it. So up to 12 lakh, out of first 5 lakh, 3 lakh will be tax nil. 2 lakh is going to be taxable at 5%. That is 10,000. Out of that 12 lakh, 5 lakh has been distributed over here. Balance 5 lakh, tax rate is 20%. That means 1 lakh rupees tax. And how much excess will fall in this category will be only 2 lakh. And that is going to be taxable at the rate of 30%. That means 60,000. So total tax will be 1,70,000. Surcharge, cess and provision we will discuss later. In the same case, if this 12 lakh income belongs to category B, 80-year or more person, in that case, what will happen? In that case, up to 5 lakh is free. So there is no tax up to 5 lakh. So this tax will be 0. Balance 5 lakh is going to be taxed at the rate of 20% and 1 lakh, and the balance is going to be taxed at the rate of 30%. That is 60,000. So tax will be 1,60,000. In the same way, if we say that this 12 lakh belongs to third category, then out of this 5 lakh, first value, 2.5 lakh is exempt. So balance 2.5 lakh is taxable at the rate of 5%. That will come 12,500 rupees. And again, balance 20% is 5 lakh, 20%, 1 lakh. And balance 2 lakh, 30% is 60,000. So total tax will be 1,72,500. Clear? Done? I have made some example for you also. Don't worry. Back to our notes. So these are the tables made on the basis of that money trail. So it's very simple. Up to first 5 lakh, if any income is going to be taxable, the tax rate will be 5%. So if there is exemption of 2.5, that means 2.5 will be exempt, balance 2.5 will be a taxable rate of 5%. If it's 3 lakh, then 2 lakh is going to be taxable rate of 5%. If it is 5 lakh exemption, nothing is going to be taxable at the rate of 5%. All is going to be taxable at the rate of 20%. This is the table we have made for you, and you can read it out. The CBDT has issued a very important circular. There is a problem that what if someone's birthday is on 1st April, like we are discussing financial year 21-22, assessment year 22-23, our financial year previous year is 21-22. So if someone's birthday is on 1st April 22, then for previous year 21-22, will he be liable for the benefit of 60 years or more? Assume any person has 60th birthday on 1st April 22. So will he be liable for 3 lakh exemption or 2 lakh exemption? So the CBDT has clarified he will be able to get the 3 lakh exemption. So the circular says clearly with example, this is very important for examination purpose. The CBDT advice circular clarify that a person born on 1st April would be considered to have attained a particular age on 31st March, the day preceding the anniversary of his birthday. In particular, the question of attainment of age of eligibility for being considering a senior or any senior citizen would be decided on the basis of above criteria. I have written the example also, you can read it out. So if any persons have 60th birthday or 80th birthday on 1st April, then he or she will be getting the benefit of 60-year or 80-year for the previous year, 21-22. Now we have a rebate also, that is 12,500 if your income is up to rupees 5 lakh, and this is only available for individuals resident, not available for HUF, AOP, BOI, etc. anyone. And the rebate is 12,500 maximum. It doesn't mean that if your income is like 3 lakh rupees and your tax will be like 2,500 rupees, then rebate will be only limited to 2,500 rupees. This is the basic concept. You must have already been read in intermediate also. So I have prepared examples. We will understand it in detail. Calculation of tax format, please follow it in every question. Calculate tax as per rates. Less rebate is a thing we might have confused or we skipped at the time of examination, etc. So follow this format in every situation, whether rebate is applicable or not. You should solve the examples in this format. First of all, calculate tax as per rates. Less rebate in a section 87, that is 12,500 if applicable. Add surcharge if applicable. The total will be called A, and then add cess on A in all cases. That will be called your final tax. Examples are over here. For example, if you are an individual less than 60-year resident and your income is 2,60,000, then what will happen? Up to 250 exempted income, only 10,000 will be liable to tax at the rate of 5%. Tax will be 500. And you will have a rebate of 12,500, but we will only deduct the rebate up to rupees 500. We can call it rebate, we can call it tax credit. Again, example 2, example 3, example 5, you have 5 lakh rupees income, tax is 12,500. In this case, you can consume the whole rebate, that is 12,500. If you have income of 6 lakh rupees, now the tax is 32,500. Now you cannot deduct rebate because it is applicable only up to rupees income 5 lakh. So whatever is your tax, cess will be applicable at the rate of 4%. Again, this example, more examples for you. Kindly solve it. If you have any problem, we will discuss it. Important notes. Rebate will be provided before calculating cess. Now the main problem is surcharge. Surcharge is so complicated nowadays. Earlier it was a very simple rate on all cases. But now it's very complicated. Surcharge is 10% on tax. Remember, surcharge meaning is tax on tax. So it will not applicable on your income. It will applicable on your tax value. Clear? So surcharge is 10% on tax. So that is 10% of whatever tax has been calculated. If total income exceeding 50 lakh and up to 1 crore. They are very confusing. Let me tell you, it's very, very confusing. I don't know why. Might be someone of you might be going to ask me, sir, why surcharge rates are different from 10%, 15%. So these kind of questions I cannot answer over here because these are very complicated things. We need a full lecture for only this thing to describe why tax rate is 10. You should ask why exemption limit is 2,50,000, why it is 3 lakh, why it's 5 lakh. There are reasons behind each and everything. But that is not a part of our course and we do not have time for that also. Otherwise, I'll explain each and everything to you. But I know if I'm going to explain that, then we are going to sort of time of our lecture. And that is not important for examination. Okay. So surcharge, for surcharge complication, I have prepared a diagram with example, a chart. You must have uploaded it or downloaded it from the site. And when we will discuss, you can find it out. It is easy. With the help of chart, you will find it out. These are very easy concept. So it will be 10% on tax. If your total income exceeding 50 lakh up to 1 crore, it will be 15%. If income exceeding 1 crore up to 2 crore, it will be 25%. If income is more than 2 crore up to 5 crore, and if it is 37%, if income is more than 5 crore. Education says 2%, secondary higher education says 1%, and health says 1% will be applicable in all cases, irrespective of your income. If there is tax, there will be cess. This is universal provision. In case of partnership firm and LLP, tax rate is 30%, surcharge 12% if total income exceeding 1 crore. In case of domestic company, tax rate is 30% if turnover in previous year 1920 exceeding 400 crore. In case of domestic company, tax rate will be 25% if turnover in previous year 1920 up to 400 crore. Right? So rate of tax of a domestic company will depend upon the turnover of previous year 1920. It will be given in question. So kindly focus in the question when you are solving a domestic company tax rate, because the rate of tax will depend upon the turnover of 1920 previous year. Right? Surcharge will also vary. If income exceeding 1 crore, it will be 7%, and if income is exceeding 10 crore, then it will be 12%. In case of foreign company, 40% on royalty income and 50% on royalty income and 40% tax on other income. Surcharge also is 2% if income exceeding 1 crore and 5% if income exceeding 10 crore. Local authority, 30% tax, surcharge is 12% if total income exceeding 1 crore. In case of cooperative society, surcharge is 12% if income exceeding 1 crore, and tax will be on first 10,000 rupees income it's 10%, next 10,000 is 20%, and balance is going to be taxable at 30%. Now a new concept. We will discuss surcharge later, right? So we are now in a new concept of marginal relief. What the marginal relief says? Marginal relief says if it happens that your tax exceeding your income. Listen what I am saying. And at the intermediate level, when I say this word to the students, they might confuse. They think sir is saying something wrong. How it's possible that our tax can exceed the income while the maximum marginal rate is 42% something? It is not possible. But you are the future chartered accountants. You know why it happens. But let me describe it. So when it happens that if your income is 100 rupees and your tax become 102 rupees, how it will happen, that we will discuss. So if it happens that your income is 100 and your tax is 102 rupees, then government say we will provide you 2 rupees marginally, 2 rupees discount. So your tax will be up to your income. So if there is income is 100, tax cannot exceed the amount of income, and if it is exceeding, then we will provide you the discount. If your income is 100, tax is 105, then MR, the marginal relief will be 5 rupees. Clear? Now, when it happens and how it happens? It happens only in case of surcharge provision. When the surcharge comes into the play, it can happen. In certain cases, due to surcharge effect, excess of tax can exceed the excess of income. But the general rule, tax cannot exceed income. Overrule, in those cases, concept of MR is applicable. Marginal relief will applicable in case of MR means if tax exceed income, then such taxes will be allowed as discount out of tax so calculated. MR apply when? In case of individual HUF, AOP, BOI, AJP, it will applicable only if total income exceeding 50 lakh, because surcharge applicable only when total income exceed 50 lakh. So if in examination, examiner asks you calculate MR on income of rupees 40 lakh, you can say MR not applicable. It will be applicable only if income exceeding 50 lakh. In case of partnership firm, domestic company, local authority, etc., it will applicable only if income exceeding 1 crore. Because in these cases, surcharge applicable only if income exceeding 1 crore. How we need to calculate the MR? Step 1, let me tell you with the help of an example. That will be more easy for us. Or say, in question it says, Mr. A, total income is 51 lakh. He is a resident and age is 38. An examiner say, calculate MR. So there is fixed step to solve these kind of questions. Very simple. I'm telling you a very simple step. Step number 1, calculate the income which is given in question. Calculate tax on income which is given in question. Make the two columns, like one is income, other is tax. So whatever income we are going to take in this 51 lakh, we have to calculate the tax on 51 lakh rupees income, whatever it comes. Like 2 lakh 50,000 exempt from tax, next to 55%, next 5 lakh 20, balance 30%. And we will apply 10% surcharge because income exceeding 50 lakh. So whatever tax will come, we will apply surcharge also. Do not apply cess. Cess is not a part of tax. Education cess, health cess, it goes to the other department, not to the income tax department. So income tax department only collect them. So cess will be imposed after all calculation in every cases. So that will be our tax in step 1. Now step 2 is fixed. Always take the income till which income surcharge is not applicable. So in this case, surcharge is not applicable up to 50 lakh rupees income. Now you will calculate tax on 50 lakh as per the normal provision. In this case, surcharge will not apply because up to 50 lakh there is no surcharge. Now what we will do? We will take difference. Difference is 1 lakh. Let me calculate it for you. Tax on 51 lakh rupees. That will be 1342,500. 10%. That is 134250. Total will be 1476750. Now step number 2 says tax on 50 lakh. That will be 1312,500. There will be no surcharge. So now difference between 13125,147,6750 will be 164,250. So now you can see the difference between the income and the tax. So income increased by 1 lakh rupees. Income increased by just 1 lakh rupees, but the tax increased by 1,64,250. Why it happens? Because of surcharge. Because surcharge is applicable on the tax of total income, while it applicable only when income exceeding 50 lakh. But we calculate it on the total value of tax of 51 lakh rupees. So income exceeding by 1 lakh, but tax exceeding by 1,64,000. So how we need to find the marginal relief? Deduct this out of this. Balance 664,000 and 250. That will be my marginal relief. I have to deduct it from my tax liability, 64250. What is my new tax liability? Is this. Whatever will come, add 4% cess now. That will be final tax liability. I have a solved example for you, but I'm just telling you how to solve it. It's very, very, very simple. Over. So this is the step 1. Calculate tax on TI of such person as given in question without cess. Total income and tax, whatever given in question. Step number 2. Calculate tax on TI of such person for such limit or surcharge not applicable. Surcharge rate change on such person. So now we will take the income on the surcharge not applicable or the rate change. For example, if in question given the TI of that person is 2.5 crore, then in first income, we will take income 2.5 crore. But over here, we will take the income now 2 crore because after 2 crore, the surcharge rate change. From 50 to 1 lakh, it's 10%. From 1 to 2, it's 15%. And from 2 above, it's 25%. So if in question asks, calculate MR for 2.5 crore, then over here, we will write 2.5 crore value. And over here, we will calculate tax on 2 crore, not 50 lakh, correct? Because we will take the value at which surcharge has been changed. It has been written over here. The limit surcharge not applicable or surcharge rate change. Then step 3 difference. If step 1 is less than step 2, then there will be marginal relief. Difference of total tax exceeding the difference of total income, then MR will be difference of tax minus difference of income. Final tax will be total tax as per step 1 minus MR plus cess. And if difference of total tax less than total income, then no MR. There will be cases when the difference of income will be higher than the difference of tax. In that case, there will be no MR. So here's the example. What I have solved for you is the example. You have to calculate MR on 51,50,000 income. This is a solved example. You can see it, you can try it, and you will feel that is a very simple concept. Optional rate for tax for assessment year 20 to 23. We have the basic rates as we discussed above, like 5%, 20%, 30%, but government prescribed one optional rate also for individual and HUF only. And they can pay tax on these new optional rate also. But there is certain disadvantage. If you opt for these taxes, these rates, you have to give away your deductions, etc. As per section 115 BAC, there's a new section inserted from last year. Individuals in HUF have no option to pay. If you want to pay tax, you can pay with the provisions we have discussed earlier. Or if you want to pay tax, you can pay via this model also. In respect of their total income, at following concessional rate, if do not avail certain exemption. Deductions like leave travel concession, standard deductions under the head salary, interest, etc. You have to give away all these deduction, etc. In new rate is up to 250, tax will be nil. 250 to 5 lakh, 5%. 5 to 750, it's 10%. 750 to 10 lakh, 15. 10 lakh, 1250, 20%. 1250 to 15 is 25%. And 15 lakh above, it's 30%. Individuals in HUF exercising option 15 BAC are not liable to alternate minimum tax. What is AMT? There's a concept of MAT. MAT is applicable for companies, and for other than companies, there's a concept of AMT. What is AMT and MAT? You will be going to study in future. Then you will discuss MAT provision. Then there will be concept of AMT also. We will discuss. For detailed discussion, it is written that the chapter 12 in module 2 of study material, we will discuss about section 115 BAC. So for time being, you just need to see these rates. This is illustration for you, solved illustration. You should go through it. If you have any problem, I'll solve it. Do not worry. The rates of tax we already discussed for LLP, local authority. This is from study material. That was my prepared notes. So they are same. We already discussed about it. Again, the society has also provision to pay tax by 115 BAD, and this is going to be discussed in chapter 12 in the module 2. Company rate of taxes we have discussed 25% or 30%. There is an alternate tax regime for company also, and these are also going to be discussed in chapter 12 in module 2. So we are not going to take it up over here. Other than domestic company rate, we have discussed 50%, 40%. Special rate of taxes, these are also some special rate of taxes which is in capital gain chapter. These are applicable for casual income also, and section 112, it's 20% rate of tax irrespective of the person. These are the tax rate which is applicable on the basis of income, nature of income, not on the basis of person. So whether you are a company or individual, if you are earning section 112 income, you need to pay tax at the rate of 20%. Whether you are a company, individual, HUF, and you are earning income section 112A, then you need to pay tax at the rate of 10%. So it has been written capital gain chapter for details, etc. Section 111A, that's also capital gain chapter. Section 15BB, that is for casual income, that is income from other source chapter. Unexplained money rate, I already discussed, that is 78% effective rate, 60% plus 25% surcharge plus 4% education other cess. Surcharge provision, these are the surcharge provision which technically complicated each and everything. So I have prepared a diagram for it, and the time is about to come when we will discuss this diagram, and you will feel it is not that complicated. If you will read from these provision and you want to learn it, you will find it very difficult, very confusing. But always try to make chart, diagram, short notes for difficult provision. They will really help you. They will really help you. So if you find some questions very complicated, any provision that is actually very complicated, then try to make a diagram. If you make a diagram or chart, the provision will be crystal clear to you. I can prove you. You can read it from here, surcharge provision, and then I'll show you my diagram, my chart, and explain it. And you will find it out how easy it is to understand via that diagram and chart. Like 3 pages they used to just make you understand the surcharge provision. And of course, the act is complicated. So that's why we teachers are here to make that simplified for you, right? Concept of margin relief we have already discussed. They are question. You can try it. You will solve it. I promise you will solve it. If you have any problem, I am here to help you. These are again illustrations, etc. I'll take the case laws and test your knowledge scenario. Fine. These are numerical question. I know you will solve it. Solution is there. If you have any problem, we can discuss in the next session. But I don't want to discuss it over here because we need to cover some more topics also, like integration of agriculture income, etc. Margin relief, section 15 BAD. You know we will discuss it later. In case of companies, how we will calculate margin relief. These are the numericals. You can find it out. You can check it out. You can solve it. Rebate in section 87A already discussed, 12,500 rupees rebate. Health and education says we have discussed 4% of course. These are questions for this. Significant select cases. Before these significant select cases, our topic is like integration. Let me discuss it once, then we will move on to our significant case laws, our MCQ test, our test your knowledge, and surcharge and other diagram. Clear? So we are on time, we are doing good. Thank you for your help. You are also doing good with me. Very good. Do not leave, be focused. Fine. So now having agricultural and non-agricultural income. Section 2.1 describes the definition of agricultural income, the meaning of agricultural income. So we all know what is the meaning of agricultural income. Generally, we think about, whenever we think about the agricultural income, we think that there's a farmer who is doing farming and earning income. That is agricultural income. Correct. That is an agricultural income. But you've already studied in your intermediate that there are 4 types of technically agricultural income. One is any rent or revenue from any land situated in India from agricultural operation. So any rent or revenue. So if you are farming on any land and produce agricultural produce and then any revenue, if you are receiving, that will be your agriculture income. And if you have a land and you let out it to someone else for agricultural purpose, now he is doing agricultural operation and getting income, that is his agriculture income. But the beauty of this section is whatever rent he will pay you, that will also be going to be treated as your agricultural income. I hope you must have remembered all these provisions. Because if you do not remember, I am here. Okay. So first is rent or revenue from a land which is used for agricultural operation. And remember, in India. So if Mr. A is doing agricultural activity on his land, he is the owner of this land, he is doing agricultural activity, he is getting revenue income. That is technically farming income, that is agriculture income exempt from tax. But if Mr. A let out this land to Mr. B, he is doing agricultural operation. So whatever he is getting as a revenue out of his agricultural produce, that is agricultural income, no doubt about it. But the beauty of this now is if B is paying rent to Mr. A, that rent is also treated as an agricultural income in the hands of Mr. A. That was a first point of agricultural income definition. Then rent from farm building is also our agricultural income. If you have a farmhouse and you are getting rent, that is also agricultural income. It says you have to fulfill 4 conditions. That must be the immediate vicinity of the agricultural land. That means the farmhouse should be within the boundary of agricultural land. Condition 1, it should be outside urban area. Condition number 2, it should be used or occupied by the cultivator. That means you have given that farmhouse also to a farmer. And that cultivator used that farmhouse for storehouse purpose or as a dwelling house. That means for his residential purpose. So if all these conditions are fulfilled, the rent is also be treated as going to be agriculture income in the hand of landlord. Then it says any nursery income. If you are carrying a nursery business, then the Revenue received by that nursery income, that is also your agricultural income. Then it says if you are doing a business that is called composite business, having agriculture activity as well as non-agriculture activity, we will treat it as agriculture income, but as per rules. Not full income will be treated as your agriculture income. Some part of activity will be treated as agricultural and some part of activity will be treated as non-agricultural. So in this case, when you have agricultural and non-agricultural income, both, in that case, integration provision comes into the force. So what is agriculture income? That is, you must have heard in intermediate course. I just described in a short. But we are not discussing about what is the meaning of agriculture income, etc. We are now going to discuss the integration of agriculture income with non-agriculture income. So what income tax says? That if you are a pure farmer, you do not have any other income except agriculture income, then you are not going to pay tax at all, income tax. Like if I am a farmer and I have 50 crore rupees income out of only agricultural operation and I do not have any other income, then my income tax will be 0, 0, 0, 0. But if you have agricultural income as well as non-agricultural income, now you are not a pure farmer because you have also other income also. So now income tax says no, we will take some tax from you on agricultural and we will integrate some part of your agricultural income for the purpose of tax also. How we do it? So for integration purpose, 3 conditions need to be satisfied. Applicable only for individual, HUF, AOP, BOI and AGP. For other purpose, whether you applicable this provision or not, tax will be same. Only these are the slab rate person. These are the person who have slab rate of income. So only these provision applicable on these individual, HUF, AOP, BOI and AGP. Not applicable on partnership firm, company, etc. Agriculture income must exceed 5,000 rupees. This is also applicable on when your agriculture income exceeding 5,000 rupees. If it is less than 5,000, not applicable. All 3 conditions should be satisfied and your non-agriculture income must exceed the exemption limit, which is 2,50,000, 3 lakh and 5 lakh. So if my non-agriculture income is 20 lakh and my agriculture income is 10 lakh and I am an individual, these provisions are applicable. How it will be applicable? Let's see. If all of the conditions are satisfied, the integration will be done as follows. Computation of tax on total income, including agriculture income. You have to compute tax on your total income, including agriculture income. I'll solve an example for you, don't worry. Then computation of tax on agriculture income plus maximum amount not chargeable to tax. So step 1 says calculate tax on all income. For example, your agriculture income is 10 lakh, non-agricultural is 20 lakh. Agriculture is 10, non-agriculture is 20. So step 1 says calculate tax as per normal provision on 30 lakh rupees. Assume your total income is 30 lakh and that is non-agriculture. So calculate tax on it. If your age is like less than 60 years, then 2.5 lakh free, etc. If you are more than 60 to 80, then 3 lakh free, etc. If you are more than 80 years or more than 80, then 5 lakh free. It's normal provision of tax. Then step 2 says computation of tax on agriculture income. Now your agriculture income was 10 lakh. Now 10 lakh plus the exemption applicable on you. That is, for example, it's 2.5 lakh exemption. Then 10 plus 2.5. Now assume your income is 12.5 lakh and calculate tax as per normal provision. Do not get confused. 10 lakh plus 2.5. So your income will be 12.5. When you will calculate tax, you will again do what? 2.5 lakh exempt and calculate tax on balance. So do not do anything stupid. Just follow the provision. Calculate tax on first step 30 lakh rupees. Step number 2 says calculate tax assuming your income is 12.5 lakh. 10 lakh plus 2.5 lakh. 12.5 lakh normal case. 2.5 exempt, balance 2.55%. And your question is solved. Step 3 says tax liability will be step 1 minus step 2. Apply rebate in section 87 provision if applicable plus 4% cess. Important thing, step 1 and step 2 tax calculation without rebate under section 87A of 12,500. And rebate of 12,500 will be available only step 3 tax liability if normal total income of rupees 5 lakh. So if non-agriculture income is up to 5 lakh, then only you can avail the benefit of rebate. And that is also after step 3 calculation. So I guess all provision has been done. Let me tell you the example of this agriculture income. Then we'll move to our segment of case laws and test your knowledge and MCQ part. We have almost 20 minutes left for the class. I know it's your dinner time and mine also. And fine. So look, if I'm saying in question that is your agricultural income is 10 lakh and non-agricultural 20 lakh. So just follow this step. Calculate tax on 30 lakh rupees income. As per normal provision, you do not do anything extra, just 2.5 lakh exempt, just like that. Normal provision according tax. No rebate applicability. Now agriculture income plus exemption limit. Now assume your income is 12.5 lakh. Now calculate tax on it. Again, that's the same process. 2.5 lakh exempt, then 2.5 lakh for 5%, 20%, the same process. Do not do anything else. Like if the individual's age is more than 60, then we will calculate 10 plus 3 lakh rupees. Now step 1 minus 2, this tax minus this tax, whatever comes, apply 4% cess. That will be your answer. Okay. Now say example, agriculture income is 20 lakh and non-agricultural is 4 lakh. Now step 1 will say calculate tax on 24 lakh. Step 2 says calculate tax on 20 lakh plus 2.5 lakh. 22.5 lakh. This minus this. Now understand rebate will apply because rebate will apply after step 1 and 2, after step 3. And we have to see rebate will apply on the basis of non-agricultural income. Understand? So non-agriculture is less than 5 lakh. In this example, non-agricultural was 20 lakh. So whatever step 3 tax, we just apply 4% cess. But in this case, because non-agricultural is less than 5 lakh, so now we will provide the rebate. And after rebate, now cess will be applicable. This is the difference. So this is the way we will find it out how rebate will be implemented in these cases. Fine. So back to our notes. So these are the questions. Now test your knowledge we have, and we just left again. This is my thank you quotation. Always remember it. It really works for me. I hope it will really work for you. That is revise twice. That's my advice to make you wise. Whatever you read, just revise twice. It will make your provision so strong that you will never gonna forget it. So please revise twice whatever you learn, but in every subject, in everything, and you will feel that you will not gonna forget it ever. So moving on to case laws. Let's see whatever I was teaching from last almost 2.5 hours, what you actually grab. So we have a case law of CIT versus Vedha, Spinning Mills Private Limited and others. Before that, should I take some queries? Let me see what is the queries. Karuna SS, sir, in practical scenario, how we identify the person section 174? Says Karuna, actually in practical scenario, it's not that easy to find it out that someone is going to avoid tax or not. You are right. It is not that easy. But if I'm going to transfer all my asset and to avoid tax, might be my neighbor or some person who is jealous of me might go and inform the income tax department. But you are right. It's not practically that easy. Practically, it's very difficult. India is a vast country. A lot of people are there. So that's really not easy for the department to technically find it out that who's going to avoid the tax. Right? It's not that easy. But as per provision, we need to write it down in examination. Suraj is Sinama Patra. Sir, I asked some question. Please, sir. Surjit, sorry. Please send me again. I'll answer your question. Namita, sir, study material 18-19 400 crore is mentioned domestic. Namita, your study might be assessment year 21-22. So in last assessment year, it was the 400 crore value we took for previous year 18-19. So every year, the previous year will change. So for assessment year 22-23 study material, if you see 22-23 study material of institute, you will find there the previous year will be written 1920 in place of 1890. I hope it's clear. Okay, Surjit Mahapatra, in the SSC, if yes, then how it is bullion, jewelry, valuable article for individual, books of account need not to be maintained because practically don't ask individual for above items. No, it's not like that you have to maintain books of accounts. Like if I come to your house as an income tax officer and I find there is jewelry of 50 lakh rupees, so I'll ask how you get this jewelry. You should have bills for it. You should have tell me how you earned it. Where was the income? I'm not asking about your books of account, but at least I can out about the vouchers, bills, etc. And did you disclose it in your income tax return or balance sheet ever? If yes, then you can be fine. But if you did not answer my question, you are not able to provide the vouchers, you are not able to provide the bills, you are not able to provide the evidence, then you are in trouble, my boy. You are trouble. Okay. Moving on to the case laws. So I hope. First case laws, whether the proceed realized by the SSC on sale of certified emission reduction credit, which the SSC had earned on the clean development mechanism in its wind energy operations, are capital receipt and not chargeable to tax. You know what? The decision is just beside. You can read the answer. The answer is a capital receipt and non-taxable. Fine. It's very easy. The answer is over here. But you know what's the problem? You won't get it. If you read the answer, if you read the decision, you won't get it what exactly happening. You can read it. And I can assure you, answer is there, but you will not realize why this answer is there. What is the meaning? You know why? Because we should understand the issue first. We should understand the problem first. Like in daily scenario, you might be scared of some subject like cost, FN, might be tax. You know, why are you scared of anything? Because you do not have proper knowledge. We scared of all those things. We do not have knowledge about it. Like ghost, because we do not have any knowledge. Doing anything, we don't have knowledge. If your electricity is gone and you don't know which wire we should touch, then you will be scared of touching that wire because you do not have any knowledge of it. But the electrician will come, he will touch each and every wire because he has the knowledge. So if you are scared of any subject, there is a reason behind it. You are not preparing for it correctly. And let me tell you, if you think in some subject, I just need 40 marks and in other subjects, I'll cover up. Don't do this. That 40 marks will be like 30 or 25 if you go or you think you can clear CA like this. So if you are scared of some subject, there's a problem behind the definitely something else. You might be not getting the right guidance. You might not be getting right questions. So discuss with your friends, discuss with your senior, discuss with your teachers, etc. Just find it out. If you are scared of any subject, the problem is not in subject because someone of your friend might be finding it so easy. But what we do, if we scared of something, we try to run away out of it. Just get 40 marks and just leave this subject. Don't do this. Just go for it. Bring it on. There must be something. Try some new things. Refer some more books. Take help from senior, etc. Until otherwise, you will get over that subject. You will be really in trouble in this examination. Why I'm telling this? Why I'm telling you why? Because we should solve the question. Even if we have the answer, we want to be able to understand until we understand the issue. So question is what? We should understand the question. Question is about carbon credit. It is like some government issues some notification that if you are producing a carbon and if you're controlling your carbon, we will give you some credit. We will give you some money. It's like if we have a solar panel at our house and we produce some electricity, then we can sell it off to the government also. And government will pay for it. It's just like that. So in some area, government make a provision that if you control the carbon, which is very dangerous for environment, then if you reduce that carbon, then we will pay you something. We will pay you some carbon credit or payment. So whether payment received by that company for controlling that carbon, which is harmful for environment, is a capital receipt or not. or it is a capital chargeable to tax or not. Now this is the question. Now if you will read the decision, you will understand what exactly is happening and why the answer is a capital receipt non-taxable. Because that is not directly, not indirectly connected to my business. My business is something else, and this is I am getting to control or to for the benefit of environment, which has no connection to my business. So that's why it is a capital receipt, and we do not know the exactly periodical payment of it. We do not know the exact definite source of it. That's why it's not a revenue receipt. It's a capital receipt and it's not chargeable to tax. Now read the decision. You will understand what exactly is the answer and why this decision is like a capital receipt, non-taxable. So every time you want to understand the solution, you should understand the question first. Like CIT versus Saurashtra Cement, what is the nature of liquidated damage received by a company? Somebody was asking me the example of liquidated damage. So you have the question, please read it out. So the nature of liquidated damage is received by a company from the supplier of plant for failure to supply machinery to the company within the stipulated time, a capital receipt or a revenue receipt. So please do read it. You have the example. Honda Cars Limited India, whether a technical fee paid and a technical collaboration agreement for setting up a joint venture, and India is to be treated as a revenue or capital expenditure, whether up to termination of the agreement. We already discussed about it. The very purpose of technical collaboration in this case was to set up the joint venture. The collaboration included not only transfer of technical information, but complete assistant, actual, factual, and on the spot for establishment of plant and machinery to set up. The joint venture itself come to end. So a technical fee is a capital in nature, since upon termination of capital collaboration agreement, the joint venture itself would come to an end. So any kind of technical fee, etc., which has been paid for any kind of collaboration, which will be end on the time of end of that collaboration, will be treated as a capital expenditure. CIT versus Venkateshwara. Can capital contribution of the individual partner create to their account in the books of the firm? What happened? There is some capital contribution from partners into the partnership firm. So partnership recorded that contribution from the respective partners, but when the income tax search came, in that case, department find that the partners do not have any explanation about the nature and source of that investment they made in the books of partnership firm. So question arises, will it be a undisclosed income of partnership firm or partners? So the decision was this, that partnership firm received it from the partners and it was recorded in the books of partnership firm. But the partners was not able to justify from where they get that contribution. So of course that will be an undisclosed income in the heads of individual partners, not in the hands of firm. Fine, now we have test your knowledge. I guess we are short of time and we have a MCQ test also scheduled. So let's start our MCQ test. In next 10 minutes, we will complete it. So how many of you are here for the MCQ test? So like do one thing, test knowledge question number 1, 2, 3, 4, 5, 6. Do read it and ask me the query. Whenever you, in our next session will be day after tomorrow. Day after tomorrow, we have a chapter of residential status and a scope of total income. That is a not that lengthy chapter. So we will have time to discuss these queries also in that chapter. Before that, I will discuss you with a MCQ sheet and I want you should answer it. Let me tell you the exact way to answer this. Okay, so the way to answer for answering this, do please answer me like this. There are 10 MCQ. What I'll give, I'll answer me like this. Question 1, option, just write down option A. Question 2, option B. Whatever answer you prefer, use like this and send me the answer. Don't send me the answer one by one. Just solve all answers, then send it me at once from 1 to 10. Fine. 3/4 are numericals and others are theoretical. Very, very, very simple. So here are the, I'll give you time of 15 seconds. You can take a screenshot, etc., whatever you want. Then I'll move on to the next question. So our first question is this. The time start now. Read the first question, note your answer wherever you want. Do not send me one by one. Please send me in one. All 10 question answer one by one in a single go. Okay, question one done. Next question two. The phrase notwithstanding. You just have to select the correct answer and send it to me. Not one by one. Please, please do not do this. I'll not consider that as an answer. Write it down with a pen or paper. Question one, whatever option you want, that will be your answer. So question two, now question number three. Okay, now question number four. Student who will send me all correct 10 answers, I will take his or her name in our next session. I'll give his or her, he or she, a virtual trophy and a virtual chocolate. Right? So I just want to see how focused you are. So that was question number four. Now this is question number five. Yeah, very simple. You might need, I guess, 5 seconds to solve all these, but the miracle is about to come. So it will take some time. And I'll give you that time for 5 minutes to solve them and send me the correct option. And I'll upload this sheet also after some time. So you can download this sheet of MCQ also from the portal. Question number six. Question number seven. You can take a screenshot of these numerical question to solve, or you can drag back the YouTube. Of course, we are on virtual platform. You can drag back and you can see the question again. Question number eight. In question number eight, question number nine is very simple. This is question number 10. It will take you time. Even if you do not have all 10 correct answers, send me as much as you can. Fine. It doesn't matter. 10 out of 10 you need to solve. So you have next 5 minutes from my side to submit your answers. Before that, I'll going to share with you charts what I have prepared for you. This is a chart for section cases in which previous year income is assessed in the same year. Section 172, 174, 174A, 175 and 176. It will be really going to help you in learning these provision. That is really simple. Now, the next chart is this is the most important chart I was talking about. Surcharge chart. Like surcharge provisions is like this. Case number 1 that says if total income does not consist long-term capital gain under section 112A, under section 111A or dividend, if you do not have income, this is applicable surcharge provision for individual, HUF, AOP, BOI and HF. So if you do not have income from section 112A, 111A and dividend, then surcharge provisions are normal. Like more than 50 lakh up to 1 crore, we have discussed it, 10%. More than 1 crore up to 2 crore is 15%. More than 2 crore up to 5 crore is 25%. And more than 5 crore it's 37%. So if you do not have income from long-term cap gain, short-term cap gain 111A and dividend, then surcharge provisions are simple. It's exactly same as we discussed, like 10%, 15%, 25% and 37%. But the problem arises when if total income consisting long-term capital gain on a section 112A or 111A or dividend. This is our case number 2. So now in this case, there will be a problem. So I have divided this case into 3 categories. That is case number A. Case A said we have 3 situations. If total income including 112A, 111A and dividend is up to 2 crore. Now understand, if you do not have dividend income, 112A or 111A income, then case 1 will applicable and surcharge will be 10, 15, 25, 37 norm. But if you have income from 112A, 111A or dividend, all of 3 or 1 of 3, then surcharge provision will be applicable as per case number 2. What we are discussing. Case number 2 has 3 situations, A, B and C. A say if total income including 112A, 111A and dividend is up to 2 crore. If your TI including these income, all of 3 or any of them, is maximum up to 2 crore rupees, then surcharge will be like this. If it is more than 50 lakh up to 1 crore, then surcharge will be 10% on tax. On all total income, 112A tax, 111A tax or dividend tax. Whatever your total tax, surcharge rate will be 10% if your total income is more than 50 lakh up to 1 crore. This situation will be applicable only if your income is up to rupees 2 crore. But if total income is exceeding 1 crore up to 2 crore, then whatever tax will come, the surcharge will be 15%. Are you getting me what I'm saying? If you do not have income of dividend 112A or 111A, then surcharge provision as per case number 1, these are 10, 15, 25, 37. But if you have income from 112A or 111A or dividend or all of them, then case A say if the total income including these income is including these 3 special income, if it is not more than 2 crore, if it is not more than 2 crore. So if it is less than 50 lakh, then no surcharge of course. But if it's 50 lakh to 1 crore, then total tax, whatever is coming on all these income, surcharge will be 10%. And if it is more than 1 crore up to 2 crore, then whatever tax is coming on total income, including these 3 income, the surcharge rate will be 15% on tax. Clear? It will be applicable when your total income, including these 3 income, is up to only 2 crore. Now B case. Now this is difference. If total income without considering, now understand, if your total income without including these 3 special income, if your other income except these like business income, house property income, is exceeding 2 crore or exceeding 5 crore. If your total income without including these income is more than 2 crore or more than 5 crore, then what will happen on 112A, 111A and dividend? Whatever tax will come on these three income, surcharge will be 15% always. Whether your total income is exceeding 2 crore or 5 crore does not matter. If your total income without including these income is exceeding 2 crore or 5 crore, in that case, whatever tax will be on these three special category of income, in that case, your tax surcharge will be 15% on tax on these three income, and on other income, if it's more than 2 crore up to 5 crore, it will be 20% of tax on other income, and if it's more than 5 crore, it will be 37% of tax on other income. Clear? Case is said, if it total income including all these is up to 2 crore, then tax surcharge will be either 10% or 15%. But if total income without including these income, if more than 2 or 5 crore, then surcharge 15% on these three special income, and on other, if it is exceeding 2 to 5, then 25, it's more than 5, it's 37%. Now the last C case, it says, if total income including 112A, now A point says including these income, your income is up to 2 crore. Now it's saying vice versa. If including these income, your income is exceeding more than 2 crore or 5 crore. That means it's the opposite of case number A. Case number say, if including these income, your income is up to 2 crore. If including these income, your income is exceeding 2 crore or 5 crore. Or we can say, if case A or B is not applicable, then case C will be applicable. So if your income including this income exceeding 2 crore or 5 crore, assume if your income excluding this income exceed 2 or 5 crore, then case B applicable. So now if you include this income, then your income exceeding 2 crore or 5 crore, then case number C applicable, and it says very simple. Surcharge fixed 15% on tax on all incomes. Whatever tax will calculate it, surcharge will be 15% irrelevant of the income amount. Might be little confusing because of shortage of time, but I have written some solved examples, so it will be really easy. Now understand, if your income is 70 lakh rupees, case 1, dividend, long term, etc. nil. So if you do not have dividend, long term, 111A, 112, then there is no issue. And the 70 lakh, it will fall in case number 1. Up to 50 lakh, no surcharge. 50 to 1 crore, 10%. The answer is 10%. If this is 80 lakh and this is 1.9 crore, now total is 2.70 crore. So now income exceeding 2 crore, but it is exceeding including these income also. So because now including these income, it's exceeding. So it will fall in the category of second case C part. And second case says that if your income including these three special income exceeding 2 crore, then surcharge will be 15% fixed. Done. Now third case, it says 90 lakh rupees and 80 lakh rupees. Now this is called case number 2A case, when including these income, your income does not exceed more than 2 crore. So in that case, surcharge will be 15% fixed, simple. If it other income is 1.3 crore and these incomes are 2 crore, again, now it's 3.3 crore. Like after including this income, it is 3.3 crore. So if after including specific income, you are exceeding 2 crore, you always fall in the category 2, case number C. So rate of surcharge will be 15%. Now it's individually exceeding 2 crore. Now other income is 4 crore. And specific income is 1 crore. Total is 5 crore. But your other income is exceeding 2 crore without including this special income. Now this is special case. Now it will fall in case number 2, B case. Now 15% on 1 crore and 25% on 4 crore. Same case number C. Now 6 crore. Other income exceeding 5 crore individually without including this special income. So it will also fall under case number 2, B case, 15% on 2 crore, 37% on 6 crore. Due to shortage of time, I am not able to make understand with the example because already 9 o'clock has been passed away and you must be hungry as I am hungry. So if there is any problem, we will discuss in day after tomorrow's session, which will be religious status and scope of total income. I hope you might have been sending me the solution. So if you skip this surcharge provision, you can drag back the video and you can see it later. Some students send me the answers, and I'll declare the best student who actually answered all the correct answers to me, and definitely I'm going to declare it on day after tomorrow. So I hope this session is very good with you, and hope we will meet again day after tomorrow. So this is good night from my side. Take care and stay happy, stay healthy. We will meet day after tomorrow. Good night, everyone. Welcome. Yeah, definitely concluded.